Good morning and happy Friday, everybody. Welcome to NinjaTrader Live on this historic day. Joining me, Pax from Chicago. Pax, how are you?
Good, Jimmy. How are you?
Pretty good, man. I mean, we were talking earlier today, and you were like, "Hey, we're witnessing a little bit of history here."
Yeah, we are. I don't even know where to start. There are obviously we can talk about market things, but look at I hope you've all been following me on Twitter because I've been trying to lead you into a path of either being profitable in this short or at least not getting killed. This market isn't going. This volatility isn't going anywhere for a long time. We're going to continue to trade with huge swings. Today is going to be, we either haven't seen anything yet. We've either just seen it start, or we can bounce in really, really fast, really hard and really deep in people's faces and give it all back. I mean, we are looking at historical stuff. So if you don't know how to trade this, don't. Even if you do know how to trade it, size down and take it easy. Fortunes can be made today and fortunes can be lost. And remember, like I tweeted earlier, something can work 990 times out of 1,000. I've been saying this over and over again, but it's the 10 times it doesn't work that people blow up, not just their accounts, but their lives. So don't do that here. Don't be a hero.
I mean, Pax, the S&P now is down about almost 15% from its Feb. Now, February is not that long ago from its
No.
February high, and it's still selling off.
Yeah. Yeah. For us, it's been great trading. I mean, it has been a phenomenal year for me. I'm short now. We talked earlier about that level 5509 in the S&P, which has been a macro level for me. A macro level is just a word I use to indicate that it doesn't change. It doesn't adjust back.
Yeah.
It's always going to be there. And that was the low that we bounced to all the way back up to the 50% fib, which we talked about last week, 5837. Which is last year's or last December's quarterly pivot. So once we came off from there, we took out 5509 yesterday. That elects a whole nother leg down,
Yeah.
625 points up, equal distance swing lower. That takes us to where I've been telling everybody we're going to, which is
Yeah.
4850.
Well, let's go to the charts and kind of look at this on a chart and just to kind of visualize it and talk about it. So I have a lot of your lines up here already on the E-mini S&P, and I mean you could see just we broke through this area of support, just kind of this previous low at 55.26, and then we started breaking through your number, and we've got nothing but downside targets now.
Nothing. All right. Yesterday I talked about air pockets between 5471 to 5395. There's nothing. And then between 5395 to 5282, there's nothing. So that level, or 5285. So now we've got 5285. I'm pointing up to my screens. I'm sorry. 5285 down to the 51 level. Now we have a lot of levels in the 51 handle. Some would call it support. I'm not a support and resistance trader. Those are targets for me, and they're pivots. Don't buy breaks in this stuff. Be careful. But underneath 5282, the next big bunch of numbers, the next big bunch of averages come in at 5160-ish, and then, which is a swing. It's just 5160 is huge, and I can explain why if you want, but there's a lot of reasons. And then 5146 is the August low when we broke last summer from 5721 down to 5146. That's the low of the regular trading hours. That's what I pay attention to. The all sessions or the ETH made a low of 5120. I don't care much about that. 5146 is where we bounced from. So if we take out 5146, the next what I call flatten zone, the next old quarterly pivot going back to March is 5101. Underneath there, we'll be at 4850, 49 even pretty quickly.
Wow. I mean, that's crazy. I know, but it's happening here. We have this also this yellow line here. I added as kind of the Globex circuit breaker, if you will. That's going to be in effect until I believe it's in effect till 9:30 East Coast time, and that's at 54 and three quarters. So it looks like it's far away, but you never know.
That's a big level. Beside it being the first daily limit, 50-50 is a huge level going back to like 23, 24. So I can explain why if you want me to, but from this quarterly pivot, 56.17, we have 111 handle swings lower. So count back 56.17, 111 handles until you get to 50.60. And we'll find, I mean, don't, everybody has to, last time we had a limit down move was during COVID. We had a few, I think we had a couple of them.
Yeah.
I remember tweeting overnight, what the limits were. And I cannot tell you how many people told me they were getting long at limit down because why wouldn't I? The market can't go any lower until, we lock limit. If we stay limit offer, if we stay 50, 54, 75 limit for, I don't know the timing, 5 minutes, maybe, or 10 minutes or something like that. And we don't bounce off of it. CME closes the market for 15 minutes. We close. You cannot trade any lower. And then we open at the, with a 13% limit. And that takes us much lower down. I forget what the level were. I tweeted it and we talked about it earlier, but
Yeah.
if we see that, then we're in, we're in deep trouble.
Yeah. And so just out of, let me ask you this. I mean, it is a Friday. We do have that non-farm payrolls number coming out, but forget about that for a second. It's a Friday, right? So is there going to be any extra positioning, or is this just another trading day and what happens happens?
Depending on how the number comes out in 20 minutes, I tweeted last night about this is, we'll get margin selling underneath 55.09. I thought that we can see some margin selling going into today. And, you and I were talking before you came in, you've worked on the brokerage side. So I asked you if margin selling happens overnight. I don't think it does. And neither did you. So if this number comes out bad and we start going a little bit lower, we will see more downside. There's a lot of positions out there that need to puke. Look, we have, and Tracy can address this a little bit better when she comes in, but we have generations, not a generation, but generations, not just of traders, but of major PMs at hedge funds and institutional traders and investors that have never traded a market that doesn't have the Fed coming to the rescue.
Yeah, no, I hear you. And you're right on the margin thing. So in futures, it's kind of a rolling thing now. The brokerage firms are pretty good on the future side of kind of doing some real time margining, and even auto liquidation stuff happens often. But the equity side is where, right? The equity side is going to probably be the bigger deal today at the open.
Yeah. Yeah. Right. Somebody in the chat, Short Life Hacks said, the reaction is overblown. Hey, listen, maybe it is, but don't step in front of a running freight train and say it's overblown. I'm getting long here. How many times do you think people said it's overblown at 57 even, at 56 even, at 55 even, at 54 even, at 53 even? Those people are broke now. So be careful standing in front of a running freight train. Don't encourage people to get long. Now that doesn't. If we turn around and we run. If we turn around and we rally 200 points from here and I start getting trolled on Twitter about buying breaks like I did in August, I'm going to tell you where to go with that. Because you want to stand in front of a running freight train, you will wind up driving that freight train.
Yeah, no question about it. Let me get my NASDAQ chart up here. This is the micro NASDAQ. Same, structurally the same, more or less. I mean, this is systematic selling that's going on right now. We have our first circuit breaker at 17,379. And a whole bunch of levels you gave me this morning. Let's talk about those.
Okay, so these levels for me, things, the way that I don't know how to say this without sounding kind of, well, my targets don't change. These targets don't change. I have targets during the day that change that adjust to different things. But these levels don't change. They're always going to be levels. They're always going to be targets, both in the S&P and the NASDAQ. It's all math. It's just simple math. It's, Fibonacci numbers, are involved in, in the stars, in nature, in our bodies, the bones in our hands are Fibonacci numbers. Everything that we have in the world is a Fibonacci number, and the markets are the same way. So the levels in the NASDAQ that we had talked about were coming down, are going to be, I can go higher, but 18,517 or 18,515.
Yeah.
Underneath there, it's going to be 18,038, which is exactly where we are now. These levels will be important when my kids are trading these markets in a few years. They don't change, and that's where we're churning now. Underneath 18,038, 17,953 is the price. The next flattened zone, quarterly pivot, this is going back to March of 24, is going to be 17,854. All right. So that's where, if you're short, that's where you flatten. If you're a dip buyer, that's where you want to get long, but with a stop directly under it. Because if we get under 1784, you're selling them. Sorry. Old Board of Trade hand signals. You want to sell them. Okay. So you want to be a dip buyer, 17,854 in the NASDAQ. If we get below there in the schnazzy, you're out. I mean, you're out and you're short, because underneath 1784, we're going to 17,625. I'm sorry, Jim.
Yeah, no, it's okay. I mean, we wicked through it just now. I mean, we wicked through it today at some point. I don't have an intraday chart up or not yet, but
17,820 is the overnight low. We stopped there. Yeah.
Yeah. Yeah. So buyers did come in back there and push us up a little bit. Let me move this away from the watermark so you can see it a little bit. So they're starting to develop a little bit of a wick on the bottom here, but again, that could be temporary. We're not even halfway back up this big candle yet. I mean, we have a long way to go to get halfway to the piercing line up here.
Oh man. So, but I can't. All right. So for dip buyers, that is a defined trade, and do not, you guys, please, in this environment, do not trade unless you are long at your risk or short at your risk. Just don't sit out and wait. Now, I tweeted the other day, this is not the trading environment for a 1 minute chart or a 5 minute chart or something like that. This is, this is big boy trading. I said that kind of arrogantly, but it is, it really is. Jimmy Jude on Twitter said it a while back. I think it was during COVID. If you want to be a big league hitter, you have to hit big league pitching. And this is slider after slider after slider from Greg Maddux that nobody can hit. That's what this is. So, the point is that, you want to be a dip buyer, you got to be, or, a rip seller. You want to trade at your risk. Know where your outs are before you take the trade. Something Mickey Hoffman taught Anthony and I back in the 90s. Before you take a trade, know two things. Where are you going to get out on a stop? Where are you going to get out if the market goes against you? And where are you going to get out for a profit? If you don't know those two things, you cannot take the trade. If you cannot define your trade, you cannot take it. Please listen to me. Please listen to me.
Yeah, no, I hear you. We're down 20% from the NASDAQ from those same February highs. I might be off a tick or two, but we're down 20%. And, at that level, you're going to start hearing folks talk about, we are now in a secular bear market, right?
Yeah.
What does that mean? Like, what does that mean? Does that mean that 20% it could be 30%, 40%? We expect sellers just to continue when folks start talking that way?
Yes. Either that or that around 20. My supposition is that around 20% in the markets, we churn it for a bit. And then, we base for either a bounce higher or, another leg lower. I didn't do the math in the NASDAQ, so I'm a little bit surprised. I should have. I'm a little bit surprised to find out that we're in that level. We're in that area. The S&P has got a way to go before we're at 20%. That takes us down to like 49.50. So the ultimate target the ultimate level I think in the S&P coming down is going to be between last year's open was 48.18. Um, Everything that I'm looking at swings us lower to 48.50. One of the things I mentioned earlier, the 625 point swings. So that takes us to 48.50. And that's where I think that the president needs to defend going into the midterms is going to be that level. Now, we also have to keep in mind, I don't know what the percentage is in the NASDAQ, but we have to keep in mind that the S&P in general is up 20%, 20 plus percent the last 2 years in a row. So like almost 50% for 2 years. We're not even at last year's open. We've got another, I don't know what percentage points, but that's 48.18 is where the S&P open. We're at 58 right now, currently at 58.90. I don't know what that means, outside of the fact that if they're, what do you know what the 20% price is in the NASDAQ futures? What would 20%
Yeah,
be?
yeah. Hang on. Let me get over there. You shoot this chart over. I just have this, I'm going to give you an estimate, not the exact number, but it'll be close enough.
Yeah.
On the NASDAQ, well, we're at it right now. So it's almost your number here. It's your red line. It's your 17,855
855.
level. Yeah.
All right. Well,
Look at that. That's like almost to a T right there, Pac. So there is some kind of symmetry here going on with that 20% and your quarterly pivot.
that is all right. That's these. All right. Now, so with these Fibonacci math numbers, these fib numbers, I they become so important to the market that everybody begins to recognize them. You guys can go back in my Twitter feed and what I call flatten zones of those levels. So, everything, they're like magnets and they pull the market down to them. So it's no accident that 20% is going to be in the S&P, at least in my mind, is 17,855. If I was actually paying attention to that, I think I would have taken some off in the S&P at, with the corresponding price to that is going to be 52.10. So the overnight low is 17,820.75. SPOOs are 52.10. So I didn't, but at this point, 60 points doesn't matter much.
Yeah, so when I do the measurement here on the continuous chart, I'm just going to bring it down till we get to about 20%, and I'm tracking that's just below your 49.50 level at around 49.30, give or take.
Right.
So and that's so even the S&P is doing a little bit better. I know the Russell 2000 is not doing quite so well.
Oh my Lord. The Russell came within 4 points yesterday of its limit. Now,
Yeah.
1916 was the overnight or the 7% limit yesterday, and it stopped at, that was interesting. So it stopped at 1920. I retweeted that level, that 19 that not the level but the limits when I saw that it was close, and buyers came in at that point. The S&P bounced, I think 60, 70, 80 points. I forget. I got to recreate it in my mind. The S&P, I think, was trading around. Oh, we rallied from whatever the low was, 54.60, 54.65. When the Russell stopped, brought in buyers, the S&P rallied back up to the opening range, back up to 55.09, which was yesterday. The last 2 days have had, Jim,
Yep.
this is interesting. The last 2 days have had very, 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 very hugely pivotal opening ranges. Remember that we talked about last week, and we talked about when I was in Florida, the quarterly pivot for this entire quarter in the S&P is 56.17. Today is Friday. Wednesday's top of the opening range was 56.17. So I'm going to buy that, and I'm going to be long, and I'm going to be long a lot. And I'm going to be short underneath it. We rallied from 56.17. You remember the other level on the upside was 57.70. The high was 73. All of
All
these
right. Let me.
levels are levels we had last week on our charts. So,
All right. Well, let's throw 56.17 in because it seems like a line in the sand for you, right? You're saying, hey, at this 56.17, I want to be short. Above it, I want to be long. Is that kind of how you're thinking?
100%. And that's where we opened on tariff day. That was our top of the opening range was 56, 1675. We came out of the opening range on the first trade. We went blowing through what I call the pain lines on the first attempt. We went up to the first 15-point rotation on the first attempt. That's always a trend day. So, and then it's, all of the levels we talked about last week, which was 56.17 up to 56.57 to 57.30 and 57.70. And then we stopped there. And then, of course, President Trump came out and talked, tariff decision. We broke like crazy. Where'd we break to? 55.09. March of last year's macro level. And yesterday's opening range, the bottom of yesterday's opening range was 55.09. So that's it.
Yeah, look at that. My crosshairs is right there. So that 55.09 was actually the previous low, right? That close enough. Well, 50, not exactly 55.09 and a quarter. That's where that little gray rectangle is, where that wick is right here. And that's amazing because this was a swing low, and we kind of pop back up. And now we're making our way back down.
Okay, but again, these prices are not accidental. 58.37 is the 50% fib line between the high and the low, or between 61.66 and 55.09. 50% is 55.37. 58.40 is last December's quarterly pivot. So I tweeted about this on the way down, 59.49, which was where we opened the year, to 58.40. Okay, so when 58.40 to 56, 56.17 wasn't our flattened zone until March expired, but 58.40 down to 55.09. We stopped right there. Yeah. Go back a month and a half. I was tweeting about that level. I called it 55.15. So now that becomes the dividing line. Yeah. 55.09 now becomes it.
I just added a kind of a loosely fitting fib extension here, and on the downside. And yesterday we closed at that 61.8%. That was 54.25. So I'm making an argument for these fibs. We're not the only ones looking at this number, right? A lot of folks are looking at this number, and sometimes these things become a self-fulfilling prophecy, don't you think?
Yeah, always. You know what? I cannot express the importance of, on a quarterly chart, a monthly chart, well, not a monthly, a quarterly or a yearly chart. 55.09 was the low. We have an outside reversal year going. We have an outside reversal quarter going. That doesn't, on the downside, that doesn't happen very often. That's not a dip to buy. Now that's a break to sell. Don't sell them in the hole.
Yeah. So Short Life Hacks was talking about putting targets really far away. And as I recall, I think the CME group there's a maximum distance you could actually put an order into the order book before they won't take it. So if you're trying to put like an order, I don't know how many points it is, but if it's really, really far, it might not be, the CME themselves might not take it. And that's why you might see some rejection on your platform.
That's an excellent point. When I was going through I've been married to my life partner, to the most wonderful woman in the world for the last 20 years. But I was married before to my ex-wife, and I were going through a divorce. I was like 32 years old. So I got this office in Highland. I was living in we lived in Lake Forest. I had an office in Highland Park, and this is in 2002. I took like a year off from the pit, and I traded 10-year. I was trading 10 years on the screen. And on an unemployment number like this, the 10-year would go, I mean, there would be huge, swings. Like, they were so far off the market. And I would put in these wish orders. It'd be like, this is kind of a stupid story. But I don't even know where the 10-year is. Where's my 10-year dome? Oh my God!
I got you. I just pulled it up on the screen. If you could see me, man, this 10-year is taking off like crazy. We're at a 113 handle, almost a 114 handle. And again, 10-year doesn't move usually this much on any given Sunday, but man, today
There it
it
is.
is just shooting up there. And if you look at the yields right now, the 10-year yield is
Yeah.
below 4%. It's the CME Group Micro yield is tracking 3.886. And this is kind of mirroring what we're seeing with respect to the anticipation of the Fed funds tool at the CME Group, saying, "Hey, at this point, we think interest rates need to come down four, maybe more cuts."
Well, this is how I think Trump is measuring his success. It's not in the stock market; it's in rates coming down. So he's getting what he wants.
Yeah, that's exactly what. Yeah, I hear you, brother. Oh my God! And they told us this was going to happen, right? This isn't like
Oh,
surprise.
no, no, I was ready for it. Yeah, him and Besant and Powell, not so much Powell, but him and Besant have telegraphed this. I mean, anybody caught wrong-footed, I don't know, is
Yeah.
hasn't been listening, or is too political, or is too involved in the mainstream media and in old modes of thinking. I mean, whether this works or not, I have no idea. Whether it's a good idea or not, I have no clue. I was talking to my oldest daughter is 27, starting her life. She works for Sargent Lundy, an engineering firm in Chicago, and
Yeah.
she was asking. She's she's 27. She's a big leftist. So we were talking about all of this stuff and I'm not. I'm an independent. So we were talking last night about all of this, and I said, listen, honey, this is going to be ultimately it's good for you. Rates are going to come down. They're sucking liquidity out of the market. She wants to move to Oak Park. She wants to get married to her boyfriend. And they're going to have kids. They can't afford. They between the two of them, they make like 300 and plus thousand a year, and they can't afford a house. And but they're getting
Yeah,
close
no,
to it now.
yeah, no, it's funny. I grew up in Oak Park, man. Born and raised, lived most of my life there. It's a great
Great
suburb.
area,
The,
yeah.
the the problem though is that, yeah, you got a mortgage problem, but you also have a property tax problem. It's not a small tax bill.
No, no. Yeah, that's a great point.
Yeah.
Yeah, can't
So
afford it. Canis
yeah,
Fornis,
I
Southside
know.
Latin, Canis Fornis. Um,
Because you get like you have Cook County, which is like the fourth or fifth largest municipality right off of Chicago, which is the third or fourth largest municipality. So you get it's kind of brutal. But so Pax, we covered a lot of ground on these key markets that we've been talking about. Any last minute observations before we get Shy in here?
Everybody take a look, make note of where we are before the number comes out. S&P is write this down in a notebook. SPOOs are at 5280. Okay. That's a macro zone, 5280. NASDAQ is at 18,121. Russell's at 18,047. The 30 years at 121.16. Write this down. I don't know where the 10, I don't know what I did with the 10-year. The 2-year is at 104. 10,
All right.
104.10 spot 7. So just make note of that so you can see how the market moves off these levels.
All right. All right. That's awesome. Let's get Shy in here. We have like a big number today on top of all this stuff. Shy, how are you?
Hey guys, quite the morning already, right?
Oh man. Yes, it is.
Crazy.
If you're short,
So
it's
we
great.
have, well, true. So we have non-farm payrolls, obviously, and prior was 151,000, and survey is 140,000. So my guess is if we come in near or above, market's not going to do anything. But if we come in well below, might see the market bounce because they'll anticipate that we see another cut. In fact, I heard you guys talking about earlier about Fed cuts. So we have money markets are fully pricing in now 4 quarter point cuts by the end of the year, plus a 50% chance of a fifth one, and a quarter move by June is already fully priced in. So markets seemingly are wanting the Fed to do something.
It is amazing how fast this pivoted. I mean, remember, we were talking highs in the equity markets February 19th. And, I think the new administration was already broadcasting what they were going to do. So it's startling.
Yeah, it's a crazy, crazy change. So
Well,
we'll see what this number brings here in a few seconds.
10 seconds.
Yeah. Drum roll, please. We're almost there.
5, 4, 3, 2, 1.
228,000, well above
Wow.
expectations.
Listen, don't try to time a trade off of this, guys. Don't time a trade.
Yeah, for sure. So yeah.
Ooh.
So there you
So
go.
Tracy, how will this the headline number anyway? What's the textbook reaction supposed to be?
Well, I mean, when? I mean, if the market's down, they want this number well under because they'll expect a Fed cut. So, I mean, if the market was up, that would be great. Then they would probably like the number. But
So so the market is now expecting a Fed cut, Trace, right?
not. No, this is
okay,
not.
so
They
no.
want to see a weaker labor market, not a stronger labor market.
All right, if that's the case,
So
if
this
there's
is
not going to be
a stronger number
is,
than anticipated.
so if the Fed is not coming, I'm sorry to talk over you. I'm so sorry. But if the Fed is not coming in, if the Fed isn't going to cut, I can't imagine that's bullish.
Correct. I mean, like I said, when we first started here, I think if the number came in at or above, I doubt the market reacts much to it.
That's
But if we
interesting.
came in well below, I think the market would bounce.
Yeah, got it.
Look at the
It's
short
like good
end of
news
the
is
curve.
bad news, and bad news is good news.
Right.
Anthony
Right,
popped in and said,
exactly.
"Not a bullish number, not a bullish number in my humble opinion." That's from Delhi.
Look at the short end of the curve. The
Absolutely.
2-year has had a huge, well, not huge, but it's had a really big range off of this, and now has popped right back. The 30-year is still holding strong. 30-year's got another point in it. Oh man.
Yeah, Tracy. Any other details in that release?
So, we have unemployment rate is 4.2% from 4.1%. Let's see, change in private payrolls, 209 versus 135K expected. I mean, this is all looking pretty good. Labor force participation rate is 62.5%, up slightly from 62.4%. So this is definitely not a terrible thing. Let's see, I always like to look at the revisions. So we had January revised down by 14,000, and February was revised down by 34,000. So it's combined 48,000 lower than previously reported. But the market doesn't care about the revisions. It's already happened, but I just like to look at them anyway.
Hey,
well,
Tracy.
the conspiracy theorists like to look at the revisions, right?
True. Tracy,
Thank you. Yes.
have the Doge cuts? Are the Doge cuts in this number?
No, definitely not.
Yeah.
Definitely not. So, I think unemployment numbers, jobless claims yesterday, you might have seen a hint of it, but these people got an 8-month severance package. So I don't know if this is going to show up for a few months within the unemployment data.
Bit delayed data, yeah. You had that you mentioned yesterday about those continuing claims, inch and higher still. These are folks that are trying to find a new job but are having trouble, and they're still on the claims.
Right. So those are still inching up. So that may have shown an inkling of a weakening in the labor market, but I mean, not really enough for the Fed to immediately cut rates. So,
Yeah. All right. Well,
but
awesome,
all right,
Shy.
guys.
Anything else to add? I didn't mean to cut you off.
Oh, no, no, that we're good. I will catch you later for hot commodities, Jim, and I'll be watching you guys on capital preservation.
Tracy,
Very awesome.
you are absolutely the best in this business. Thank you.
Ditto that. All right. Tax, we're back on the charts.
I took some profit on my shorts. I bought some in at 53. Actually, I'm not real sure. 53 even-ish.
Okay.
I'm gonna wait
So,
for
right,
I'm gonna wait for the
yeah.
open. I'm gonna wait for the opening range to decide to take more profit or to add.
All right. I'm just gonna throw up a 30-minute chart here. I know there's a lot of lines on here. I'm sorry for the confusion. Any questions on them, I'll walk you through them. But just kind of looking at what's happened so far, the big break seemed to happen at the 6 to 6:30 candle, which I don't know why at that particular moment, that big sell-off. We broke through the pivot S1, S2 didn't stand a chance. Then we kind of slowed down now to the bottom of the value area and the volume profile. But in my mind, this is a benchmark candle for the day, right?
Yes.
Until we start closing above the piercing line of this candle, which is approximately 53.46.
Yes.
My guess is folks are going to be looking for places to get short.
Yes. So yes, me too. So of course, me and my group, we use the opening range to as our daily pivot. But yeah, so 50. That's a really good point. 53.46, the midline of that candle. So I think we broke because I haven't dug into it, but I think we broke like that because of the China reciprocation, right, or the China slap and tariffs on us. I was waking up and getting ready for this, so I didn't dig into it. But the midway point to that it's going to be 53.46. Above that, then 53.95, and above that, 54.71. But 52.85, that macro zone that we've been talking about. Now, there's a lot of reasons why 52.85 is important. So it becomes also very pivotal. Above this, we're long. Well, don't buy breaks, but you can take a long here if you want to with a very tight stop. But above this is pivotal, or below it, we are short. And, below it, we have a lot of room to go, before we find any real, not bottom, but, bounceable bottom anyway, or tradable bottom, for the day, for an hour, for 15 minutes, whatever it would be.
Yeah, and I love these floor pivots. We got an S3 down here around 51.67. That's another kind of area of interest that people use.
That's what we talked about earlier.
Yeah. And today the gamma levels sometimes get a little wonky in this environment when you have just price dislocation, huge price dislocation 2 days in a row. But they're still relevant. So don't let the fact that it says put support. Don't think that's a target, but it's not support, it's resistance, right? And that's at that 5,400 level, that even level, which we would expect. And Jax 1 is all the way up at 5,500 up here as well. So again, that's going to be an important gamma level as this thing plays out. If anything happens on the upside, which I don't think anybody expects.
No. Look at gold's getting whacked now off the open. Fat fish, but 30-year bonds going higher. The 30 years going higher, the 10 years going higher. The long end of the curve is flying. And remember they're inverse. So the higher bonds go, the lower rates go.
Yeah, and this is a two-handle move. A two-handle move on the 30-year Treasury bonds is a big day, right? Routinely we'd expect a one-handle move maybe, but a two-handle move, is a pretty big move. And this is just, I mean, look at this, look at the candles. I mean, we're just marching up higher, marching up higher. We're paused right now, probably waiting for the open, but that point of control right here, 121.16, that's 121. And basically that's a half of a point, right? Because it's trades in 30 seconds. So 30 seconds is a half. So 121.16 is right where that point of control is. and it's taken a breather. But wow, I mean, this is spectacular, and rarely do you see 30 years exceeding that two handle. You know, we've seen 3 and 4 handle moves before, but it's pretty rare. So we're witnessing history again right here.
Look at the gap in the 30-year. The gap in the 30 year is a point and a half. The high yesterday, the high of the 30-year yesterday was 120.5. So 120.05. Okay, 120.05. The low today is 121.10. So
Yeah.
that's a 0.5 tick gap. I don't know that I've ever seen a gap in the 30-year that big. Maybe there has been. I don't know, but I can't remember one.
Yeah, I remember one. I was a, I was a,
The way you said that was like, oh, I remember it. It was funny.
no,
I'm
because
sorry.
I was I had a small like sliver of my life where I was a commodity trading advisor, managing, accounts.
Mhm.
And I don't remember what the event was. This is like 2003, 4, 5, or 6 or something like that. And I was doing bonds. That was my thing. I was doing bonds. And we had a four-handle move, unexpected. Maybe it was non-farm payroll. It probably was non-farm payroll that did it. And we had a huge gap. And I was biting my fingernails and I closed the CTA. I'm like, nope, I can't handle this.
Oh my Lord, your blood pressure's through the roof. Your heart rate's at 200. Yeah, sweating, cold sweating. Yeah, I know that feeling.
I could lose my money. I'm fine with that. But other people's money, no, I don't want any part of
Yes,
that.
I know. I know.
You mentioned gold. You mentioned gold packs. Let's just pull up this an intraday chart, 30-minute chart again. Yeah, I thought we were going to rally up. I thought we hit that 1 day max. That's one of these Mentor Q levels that are super super handy, and that Jack's one level, and we just sold off, man. This is a big sell off, and I'm surprised it's such a big sell off. It's like now it's going in tandem with the stock index futures.
The bottom of the opening range. Okay, and that's important to note. The bottom of the opening range in crude is 31.16. So if you're trading crude, you're short at 31.16. Crude, I mean not crude. I always say that. Gold. So if you're
Yep.
trading gold on the downside, you're looking at 30.64, I think. 30.64 and a half. 30.64 and a half is going to be the first major pivotal price. My God, gold has run up so fast that we don't find a downside, macro level until 40 dollars from here. That's crazy.
Yeah, that is crazy. But remember, we had that huge run for so many days in a row,
Right.
popping us over that 31,000, popping us over that 32,000 briefly, and then this nice retracement. I mean, if we look at it just at a daily, um, I'm going to put a retracement here instead of this extension really quickly here, if you bear with me. And the way I'm going to draw it, there's a million ways to draw fibs, right? But I'm going to use this. I'm going to use where the rally really started. Right, we were consolidating, and then on the 11th, we hit that low. I'll bring it all the way up to the high. And when you look at this formation, I mean, it was a textbook 38.1 on the
Yeah.
retracement back down. We wick through it. We're trying to get back down there again. Now I'm thinking, all right, 30.79s are going to be important to me.
Wow. Okay. Yeah, 30, pay attention to that 30.79 price. 30 underneath 36, 31.16, 30.80, underneath 30.80, then 30.64. That's a trade plan right there. Stay out of the
Yeah,
middle. Don't diddle in the middle, as they say.
yeah, yeah. No, for sure. And I don't know if you ever do any. Do you ever do any moving averages? I have the 8 EMA up here, and on a daily chart, that served me well based on closes, right? When we closed above the 8 EMA yesterday with that big buyer's wick, that means something to me, right? We tested it again today. And so now that second test today is a little bit bearish here, man, in my mind.
So okay, the moving averages I look at are going to be the 50-day, the 100-day, and the 200-day. But because the 50 days at 29.51, the 100 days at 28.08, the 200 days like 26 something. So 26.80. So we have to look at shorter term EMAs, or moving averages, and the 8-day is as good as any, and it gives us a really good look as to what everybody else is looking at.
Yeah. I mean, I'm just going back to that intraday chart here. The other thing that's just amazing to me is these one day maxes and one day mins that I get from Fabio at Mentor Q, and in an anticipatory kind of environment, we just kind of tag them. Eventually, they won't hold, but so far they have held. They frame the conversation so far this morning very nicely if you're trading pre-market.
Yeah, yeah, they have, and they will continue to. It gives us trade definition in a market that just seems to be all over the place, and that's what we need more before we take any trade. We need to define our trade. Where are you? Where are your outs? Where are you going to get out
Yeah.
for profit? Where are you going to get out for an expense?
Yeah,
You-
and we're gonna go ahead. I'm sorry. Go
I
go.
was just going to mention, in the spirit of Capital Preservation Friday, is something I tweet about every Friday and something I talk about, for a lot of us trading futures or even SPY or, ETFs, whatever, we have had significantly profitable weeks. If that's the case, uh, uh, take the money out of your trading accounts. Don't, if you leave money in your trading accounts and then you start to size up because you've made some money, that's a passport to poverty. It's a recipe for disaster. Take that money out, properly fund your tax account. Please properly fund your tax account. Do not get into tax trouble, and reset and do it again. Do it again. Build,
Yeah.
build, build. If you made 10,000 this week, take it out, protect it, and go do it again. Reset. If you struggled this week, do not chase the money. Don't try to make your money back. It's Friday. I got to make my money back. That blows accounts.
Yeah,
Reset
no,
every day.
that is great advice. And the thought process is, okay, I'm going to trade, let's just say two E-mini S&Ps, and I'm consistently making this every week, and instead of pulling it out, it's like, all right, well, now that I have more in my account, I'm going to trade three, and I'm going to trade
Right.
four, and I'm going to trade five, and as soon as
Yep.
you scale up like that, guess what happens?
You get killed. The sizing up is a business decision taking into account many different business factors, right? It don't size up just because you have a few dollars in that you've made. This is a business. Take that money out, protect it, grow it, protect it, grow it. I don't ever see anybody talking about proper account management on Twitter. I never see anybody talking about it, and probably for good reason, right? I mean, you know, but managing your account is managing the money that you made and not chasing your losses. Just managing your accounts the right way and your tax accounts the right way is an integral part of lasting in this business. So please take it from me. Please manage your accounts the right way. Don't size up, as Jim and I were just saying, because you made some money this week. Don't start to overtrade because you have. Also, don't chase lost money. Lost money is lost. It's in the past. It's history. It's gone. Forget about it and move on. If you live to fight another day, well, cut your size, give yourself a chance to reset, and look for good trades where you can define your trades. Where are your outs?
Live to fight another day. That is the phrase of the day. Let's take a peek at silver too, real quick, because this has just been crazy here, and I can't wait to talk to Tracy about this. And hopefully we'll get that on the agenda for hot commodities. But I mean, this has been a crazy turnaround, right? Just a crazy turnaround. We're going back down to this double bottom here. We saw these lows back in middle of January. We tried to get them again at the end of January, and now we're just heading right back down to my rectangle, man. This is looking. There's some reason, and I'm sure we'll get some advice from Tracy, but there's some reason why this is happening. This is really a big sell-off.
Holy smokes, that's huge. I didn't see that until just now. My Lord. Oh, so we've got kind of a triple top up there too. Not well, a double top anyway. Oh, that's kind of a triple top. Going back to October of 20 on the monthly, going back to October.
You're going back. Okay.
Yeah.
Okay.
March and October of 24, March, and then April. Oh man.
Yeah. So big. I mean, this is just total retracement happening right now. All the moving averages are just falling out of bed. This is like kind of like a stock index future, right? I do not want to hit the buy button until the dust settles here.
I thought we were going to see I thought we were going to see the Hunt brother run up prices.
Oh my goodness. Yeah, but so just kind of looking at that 30-day, the 30-minute chart right now, hit that pivot, put support for zero DTEs are right there as well at that bottom wick right now. I'm not sure it's going to hold or not, but so far it has. We tagged it. That 1-day min is way up here, so the ranges are out the window from anything that's predicted by anybody. And then that Jax one level though is pretty powerful at $32. That's that lime green line at the top of my chart right here. But this is a big move down.
Yeah, that is significant. That's very significant.
Yeah, this is interesting. This is in futures trading, any kind of trading, when you have days like this, they're historic days, right? They don't happen every day. 2 days back to back, right? We have historic days. I mean, just looking at crude oil right now, real quickly, I'll go to the daily, but gee, I mean, that's dramatic, man.
Oh my gosh, yeah, crude. Man, we didn't even talk about crude. So, oh man, all right. So, uh, crude can go as low as 59.50, 59.60. You know, the 59 handle someplace in there before it finds any real support. 60. What was what was that level that we were talking about earlier? It's like 60.50 or 60.70 or something. 60.80. Let me look.
Hang on, let me get the 59.50 line on here. Line in the sand.
Oh my. Okay. My nudge. Oh,
I mean, this is yeah. I mean,
60.50. Yeah. So like 60.50. I don't know where it stopped this morning, but let me see. Sorry, I should be better prepared for this.
no,
60,
you're good. You're good.
we stopped
Yeah.
at 60.80. So 60, these two prices, 60.45 to 60 double. And then 61.10, 61, no, 61.20 to 61.30. And now resistance is going to come in. I hate using those terms, but resistance is going to come in at like 62.30 to 40. So pay attention to 62.30 to 40. Above that, 63.40. It's every dollar. Above that, 63.40, then 64.80. So 62.40, 63.40, 64.80. And then what's the gap? Oh man.
I'm gonna get that 62.40 level up there. And so you're saying every dollar after that, so 63.40, 64.40.
Up to 60, well, 64.80. So buck and a half, buck and a half. This is the
Yeah.
greatest business in the world. There's nothing like it.
It's every day, every single day. You
I
get
think
something happening.
every time I see Leo Malamed, I haven't seen Leo in a little bit, but every time I see Leo Malamed, I thank him. And I was over at his house swimming with my kids and his granddaughter a few years ago. And he said, "Matt, why do you thank me? Leo, if it wasn't for you, I'd be driving a truck or I'd be a Chicago cop or a priest, or something, or criminal. I don't know. I would not be here sitting with you, living in that gigantic ass house I live in Lake Forest, which I had to
You,
sell, by the way, when I went broke and drove Uber. But, I mean, it was.
boy, that's a whole other story. But and you just ran through all the professions of a Beverly
Yeah, the
South
Southside
Side.
guys. Yeah. Yeah, that's exactly my brother, Pat. Every great Irish Chicago trader has got a brother named Pat that's a cop. My younger brother Pat is a Chicago police sergeant.
Yeah. By the way, if the only St. Patrick's Day that rivals anything in Boston is in Beverly, it's legendary, isn't it?
Oh man. Um, uh, we even have our own song, Southside Irish. When it comes to baseball, we have two favorite clubs, the Go White Sox and whoever plays the Cubs. I love that line.
Go White Sox. That is awesome. That is awesome. All right, let's take a peek back at the E-mini S&P, see if anything's happening right here. I'll just go to the 30-minute chart. We're still a good half hour away plus from the open. And a little bit of buying coming in here, trying to get us back up to S2. I'm just going to throw another fib line, loosely fitting fib line. I'm not going to get the exact high and low because we're streaming and I'm trying to do this quickly. But there's the high, here's the low, and yeah, we're now interestingly enough, we're trading above the 38.1%. 50% and the S2 are at the same level. And then there's a third thing that's going on there, Pax, is that there's a volume deficit right there as well, right? We
Yeah.
have a double distribution, a volume deficit. So right now on my radar screen is 53.19, give or take a point or so, as kind of an important level. If you want to get short, that could be a possibility. If you want to get long, if you see a crossover, that could be a possibility. Whatever your strategy is, but we have three areas of interest colliding right there.
That's going to be good. That's 53.19.
Yeah.
Yeah, that's going to be good. Okay, 53.19 down. All right, 50. So now in succession, 53.46 that we talked about a few minutes ago that you found, 53.19 down to 52.85. That's going to be the tradable range.
And look at that 50. Look at that 53.46 you just mentioned. Guess what? 61.8% fib level.
Then above 53.46, then it's back up to 53.95, and that takes us back to that distribution area.
Yep. Anyway, this benchmark candle is in the way, man, and the piercing line is pretty close to that 61.8%. I don't have the math exactly in my head, but that's going to be a magic moment for me if we get there. We might not get that high.
No, anything. Anything can happen today. We came down so far. That's what I mean. Don't pick tops. Don't pick bottoms. We have come down unless you're getting long or short at your risk, like we're talking about here. Okay. We have come down so far, so hard, so fast that we can bounce, we can bounce back up to that macro zone at 53.95. We can be trading at 51.01 pretty quickly. Now, we're going lower. It doesn't mean that we're going lower now. It doesn't mean we're going lower today. But we haven't seen the low. The low. We may have seen the low for today, but the point is that trade what's in front of you. Trade what is in front of you. Define your trades before you take them. You got to know where you're going to. You got to know where you're going to get out before you get in. And if you're long or short at or near your risk, then go ahead and do it. I don't fade markets. So whatever the opening range is going to be, I'm going to be short above it and long above that. Okay. I'm going to maintain shorts from Thursday. What is today? Friday, Thursday, Wednesday night at 55.59 and 55.09 yesterday. I'm maintaining something until they come back above that 53.95 level. And then I'll start taking profit. And that's okay because I'm willing to give up some profit to make another 2, 3, 4, 500 points in these without risk. I've already paid for the trade, taken profit all the way down. Best place I took profit was 53 even. Remember also go ahead.
No, I just wanted to remind everybody, you look at an opening range of just like 30 seconds, correct?
Yeah, that's the way that it was defined since Dow theory was invented by the Chicago Mercantile Exchange, Chicago Board of Trade. I don't know about the CBOE and options. I don't trade options. But yeah, the high and the low of the first 30 seconds. I'll post it on Twitter. So if anybody's following me, I'll post them right after the open on Twitter.
All right. That's appreciate that. I know the whole thing about opening range, everyone has a different definition of how they think of it. That's all.
Different versions of it came into play with market profile with the initial balance, but that was never an opening range. It was just the initial balance. The Mark Fisher Mark Fisher was an old Merc guy and a board of trade guy that traded the opening range as I do. And then he started to manage huge amounts of money. There's only so many S&P you can buy, above the 30-second opening range and sell. So they came up with different versions of it. And, same thing with Toby Crudele and so many others. But, I still trade the same thing that was taught to me. My mentor, Judd Hirschberg, told me when I met him in 1998, I'll teach you a way of trading that works on the floor, off the floor, anytime in the world, any place in the world. And it still does.
Yeah, no, I hear you, man. I'm going to start following that. I just threw your Twitter handle in the you can't call it Twitter anymore. The X handle.
X
in the chat.
We're old.
We're gonna call it Twitter till the end of
Yeah.
time, probably. But
We're analog men in a digital world. It's okay for us to continue to go back to
yeah,
staying
exactly.
outdated things.
All right. Well, we have coming up here, if my clock is right, which I think it is, we have a Sarah in that's going to be trading live today. Sarah Strat Sniper is going to be with us here in a couple of seconds. So, Pax, thanks for being here with me, man.
Thank you, Jim. Today's a historical day. Don't be a hero. All right. Capital preservation is the name of the game. You have to survive to thrive.
You have to survive. That's funny. That's like that F1 thing. You got to survive. What is it? It's drive to survive.
Yeah.
All right. It sounds
Thank you,
good. We're
Jim.
gonna thank you. All right. Have a great weekend. Appreciate
You
you.
too. God bless you, brother.
All right. You too. All right. So we are bringing in live to trade the open. We have Sarah Strat Sniper. It's so hard for me to say these three S words in a row, but she is here with us today, NinjaTrader Live. How are you, Sarah?
Hi, Jim. I'm good. You'll get better at it. Just 3 S's. Sarah Strat Sniper. And I have nobody can see it because my computer. I have the Strat shirt on today, so we're ready to rock.
Oh, how do you get one of those?
You just go on the internet and make it.
That was like a hint. Like, could you get me one? I'm
Yeah,
joking.
what color do you want? Probably not pink. Fine, then don't rep the Strat. That's fine too.
No, I do want to. We got, I had so much good feedback from you last week. As a matter of fact, my brother, who's a little bit younger than me, a lot of bit younger than me, who has been trading futures for a long time, he called me up on the phone. He's like, I learned more from Sarah. I think she's right on point. Get her on again. And well, little did he know, you're going to be on Fridays, which is awesome.
Oh, that's very cool. I love to hear that.
Yeah. So,
Yeah, the
all
Strat's
right. So
super simple. We like to teach it.
yeah. So we're gonna go ahead and let you do your thing. I'm gonna back out and eagerly and watch every word that you say. So thanks for being here with us.
Okay, cool. Let's get into it. So, what is happening? It's pretty clear what's happening, but why is it happening? Let us start at the monthly time frame. So kind of at the beginning of the year, it was pretty boring, right? Just kind of diddling about at the all-time highs, which is, it's boring. It's boring for us because there's no volatility. So I was kind of, sorry for your 401ks, I was kind of hoping for a crash, and we actually got one, which is lovely. For the traders, we don't care what direction it's going. We're not married to a bullish bias like many traders are. And we got a bearish signal back here in the beginning of March, and I've talked about this. I made a video, I think on like 228, and said, be prepared for downside because we had our short set up. So we had a 2 up, 2 down reversal, and we had all these pivots below, which we're starting to bump into now. And let's see here. Let me add something. Oh, not what I meant to do. Hold on, let me redo that. So what I'm trying to do here is get quarterly charts. So we want 3 months. Hold on, I feel like that's not actually accurate. Hold on. It is not. Okay, I'm going to pull over a different chart real fast. because I know this quarter is correct. So here we've got the quarterly chart. And in first quarter, we also hit a short strat setup, which again, it's the same thing that I was showing you on the monthly just a minute ago. It's a 2 up, 2 down reversal. So this candle is a 2 up because it broke the previous candle's high. And then there's only a few ways that price can reverse. And we know this because it has to be. So we can't go down unless we break a previous quarter's low or a previous month's low. So this was the short setup, which is a 2 up, 2 down reversal. We've already hit one target, we've almost hit 2 targets. So it's just continuing down on the quarter. So this is what we call 2-2 continuation. If you look at NQ, same exact setup on the quarterly. The quarterly was here. So a break below Q4's low, targeting here, here, and here. And NQ actually, I believe, hit target 2 on the quarter. This is interesting. This looks different. Normally I can see the open, high, low, and close, but I can't on here for some reason. Let me see if my thing is like zoomed. Well, that's getting bigger, isn't it? There we go. So the low, so target 2, the low was 17,852. And we hit 17,820. So we have hit target 2 on the quarter. Same with RTY. 2 up, break the previous quarter's low, 2 down, target 1, target 2. Now, the way that the data is displayed is a little funny. Where's the reset button? Because I'm using the quarterly contracts, not the continuous, so it's just not as informational. Same thing here. So we had a simultaneous, this is what we call a simultaneous break, which basically is exactly what it sounds like. It's a bunch of things doing the same thing at the same time or simultaneously. So everything this last quarter went 2 down reversal, and it's pretty much market wide. So you can expect those to work. Let me get that back over there. And then what's interesting, what happened during Liberation Day. I don't have all 4 futures pulled up on this chart, but all 4 futures took out the high of 328. So if you can see where my cursor is, they all took out this high. So NQ took out that high. So when we're trading, that is considered a level of exhaustion because it hit the target. So it hit the target, and then that's where the reversals happened. Same thing here, 328 high. YM, 328 high. So they all hit the same level, same target, and then all reversed during that talk. It looked really bullish while he was talking, but then we got a giant reversal. And if you went to, I think it was the 15-minute. Sorry, still a little bit, my voice is still a little bit not good. What day was that? That was Wednesday. Hold on. Pretty hard to miss. Hold on. Okay, I'm just going to pull this over again. Nope. So again, I'm gonna mark this level, the 328 daily high. And we're gonna go down to the 15-minute chart. 5-4. I'm just gonna make it big because they all did the same thing. So there was the 328 high, and we hit it. This was when he first started speaking. This is an outside bar, and outside bars are very important because they are a broadening formation on a lower time frame. And what that means basically is if price is going to continue, because again, there's only a few ways price can reverse, one of them being a 1-bar rev strat, which is an outside bar. So we knew that when we went 3-2 up, it was fine at first, but then it started failing, coming back below that candle's high. So potential 3, and it did that. And then it even went outside day that day. But you had a continuity flip here as well. And they all, again, this was a simultaneous reversal. All the futures went 3-3 reversal. So that was nice what happened on Wednesday, if you're on the right side of it. I'm sure a lot of people had options, probably got burned if you were bullish, but again, we don't really want to trade into known news events. We like to trade the reaction after. Same with earnings. We don't want to be in it before the earnings are released for stocks because it's just, you just don't know. Okay, and then we're going to get into, so we started at the month. Just a second, it's taking the charts a minute to load. We started at the month and we showed you. So these are our targets being pivot lows on the monthly, and we've taken out anybody who's been long since August is now underwater. And then we have another major pivot low target here at 52.11 which it did not quite take out. Let me move this over. It's in my way. I don't think it took it out. Yes, it did. So we did just take out that major target. So we're going to have to see kind of what happens. Let's go to the weekly. So NQ also took out this major pivot target. It's got another one down here. There's just a whole bunch of targets lower. And we have full time frame continuity to the downside, which means and I was listening to Pax and Jim backstage saying don't try to pick bottoms, and he's exactly right. They're exactly right because everybody's selling, right? So the likelihood that you're going to catch a bottom, not great. And I do also want to show you guys SPY. And what is happening now and what happened in 2022. Let me get my higher time frame charts pulled up first. Quarter, month, and I'll pull this chart over in just a second. All right, so what we have, this is the SPY chart, which, if you're trading futures, you can also trade SPY just based on what the futures are doing. But, so first look here. What do you notice about this candle and it might be hard to see, but what happened was in 2022, hold on. In 2022, we made a slight higher high. This is a yearly candle, and we look at all the time frames. So this is a yearly candle. In 2022, we made a slight higher high to 2021's candle, and then it went from green to red, coming back below 2021's highs. So in January, I remember, we were calling for an outside year, which means we were going to take out 2021's low. And we said this in January, which it's just not to be like whatever, but again, there's only a few ways that price can reverse, and a 1-bar rev strat, an outside bar, is one of those ways. So in 2022, we were calling for 2021 lows. You can see that we got it. Then once you get it, that's exhaustion risk. But the same thing is happening right now. Okay. And what I mean, let's just move this line. Okay. 2025 made a slight higher high than 2024, started coming back in, and then flipped continuity. So potentially for 2025, we are going to go outside year, which would be 466.43. And I know it sounds crazy, but it's the way that things are looking right now, it looks very likely, as long as we can keep continuity red and we keep twoing down, meaning lower lows and lower highs on, the quarterly, the monthly. You might get, and look at SPY now, it's down here at 524. And we have something called the 50% rule, which we really don't use much anymore, but we are more than halfway below 2024's candle range. So excuse me. So an outside bar is very likely. So I don't know if you guys follow Alex, my partner. He was talking about this and, talking about say a prayer for your 401ks because we have potential outside year. So again, don't try to pick bottoms because it can go a lot lower than you think it can. All right, what time is it? Let's see. What else? So ES and NQ both did just hit major targets. So we will just kind of have to see what the open brings. I know there was a really bearish 60-minute candle before NFP. This guy. I think I need to change my time. This candle says it's a 10. Yeah, I need to change my time. I'm not sure how to do that. Let's see. If anybody knows how to change the time zone, let me know in the YouTube chat, please. So somebody asked, why do we not use the 50% rule anymore? Because you can get in from a lot sooner. But the 50% rule is still good to look for corrective activity and try to get in on the rest of the move down. But as soon as you fail a previous candle's high, we're looking to go outside bar. Trying to find a good example. Tesla the other day was a good example. But I'll show you, I'll explain why. because again, the 50% rule kind of just, we could be in a lot earlier. So if you mark out Tesla's previous day's range, which you can see I did. So the low of Tuesday was whatever it was, 259. The high was 277. They gapped it down. So part of gapper strategy is trading in the direction of the candle color. So the candle color is noted by the open. So if we're trading below the open, the candle will be red. If we're trading above the open, the candle is green. Seems simple, right? And so once we gap down, and typically we say gap downs are for buying and gap ups are for selling, and it really kind of worked out in this instance, but gap down, green, and they reclaim the previous day's low. So what that means is we anticipate and we're calling for an outside day. So this previous candle then becomes your trading range. Okay, and we know what reversals look like. Let me kill that day. So you go down to a lower time frame. And this is the previous day range, right? So we want to know about that. And it's very important that you mark your levels. This is with anything that you're trading. Futures, stocks, all of it, everything. So we gap down open. This is a 2 down, 2 up reversal, which started to reclaim the previous day. This is something that you want to take because they're gapping down. You can clearly see that they're buying. The target was right here, which we hit it. And that's where I more specifically look to take profit because I am very adamant about taking profit at my targets. And then once you're at your target, that's where you can expect corrective activity to happen, which is what happened. It did continue, but that's more than enough, right? So that's why we don't use the 50% rule, because if you did, you would have been in so much later. I'll even mark it. So the 50% rule here, 50% rule is more just like a rule of thumb. Like if you've retraced half of the previous day's candle, it's very likely you're going to go outside day, which an outside day takes out the low and the high of the previous candle. But if you see where the 50% rule is on this chart, 268.35, and then you look at your actual entry, your 2-2 reversal entry on the 5-minute chart, way, way lower. So you can measure it. So you would have missed out on a $13 move if you waited for the 50% rule, because we know how outside bars happen and how they form. So that's why we don't use the 50% rule so much. Hi, Sand Dollar. Right. Oh, somebody gave me an answer. Let's look at that. Save. Right click on the clock. No, it's not. It's not this clock. It's this clock. And what I mean by that is, so it's 9:23, which means we should have a 9 o'clock start candle, but this candle starts at 10. So my NinjaTrader time is off. Oh, on the main window of NinjaTrader, go to Tools, Options. Oh. Okay, I'll worry about that a different time. I'm not going to do that right now, but so right now we can look and see what happened. And again, when we hit our targets, that is where we expect profit taking, because that is the proper place to take profit. So you can expect to see reversals happen there. Okay, we can get rid of this line now because that target's long gone. So let's go to the 15-minute and see when the reversal happened. Right there. So we hit the downside target. We can even go the 5-minute because it looks like they immediately reversed it. Yeah. So we hit that weekly major pivot low, and then you got a 2 down, 2 up reversal, which Still going. If you use like a 30-minute chart. Still good. Not sure how high it's going to go. I wouldn't expect a ton of upside. Oh, thanks, Jim. Oh, Elaine's here. Hi, Elaine. Happy Friday to you, too. So, I don't know if we're going to get any kind of decent trading today because we did hit downside magnitude. Again, it happened before open. Last Friday, we had really good price action. We didn't miss it. So we're just going to let them open and see what happens. My game plan for today is I don't really have a game plan because, and I don't trade every day, and it's important to like talk about that. But if things have already hit their targets, I've kind of already, missed it, and that's fine. We're going to get plenty of opportunities to play, but I really like having a target to go after. And since we've already taken it out, I mean, maybe we're going to get a 60-minute reversal and maybe we can go and take out this 51.77. We'll have to see. NQ also still has that lower target, so maybe we will get something. The 15-minute is trying to reverse right now. The 30-minute has a ways to go before we get a 2 up, 2 down reversal. But if they're going to keep puking, we do have lower levels. So this is exactly what we want to see. We want to see corrective activity. And when I talk about corrective activity, I mean green candles in the opposite direction of the trend, or basically a bear flag. My mentor used to get mad at me when I said that word, but to make it, understandable to people who don't trade the strat, that's kind of what we look for. We look for corrective activity to happen, and then we look for reversals back down. And since we are opening currently inside bar on the 60s, and we've not had a 30-minute reversal yet, we have a low, lower, higher low, higher low, higher low. So maybe when that trend breaks, we might get some downside, but we'll have to see. Right now, again, we're inside 30 and inside 60, so there's really nothing to do here until that changes. But we are going to get new candle opens on the 30s in 2 minutes. So I don't know how they're going to want to end the Friday. We'll just have to see. Yeah. So Lunky and Elaine, let them open, let them open. That's That's what Rob would always say. Let them open. Let's see what they're going to do. Obviously, the trend is down. Every time frame is red, except the 60. So you got the year is red, the quarter is red, the month is red, the week is red, the day is red. Do you want to be long? No. So the only trade here, in my opinion, would be a short. So we just have to see what happens, see if we get one. And I think I like the 30-minute. Oh, did you guys hear the ding? Market's open. So we got inside 30s. And again, I am not interested in any longs whatsoever. So just take that off the to-do. Like we're not trying to trade long. Because if you look at the day, how are you going to turn that around? That's another cute little strat term. How are you going to turn this day around? How are we going to make it go from red to green? It's unlikely that we are. Microsoft. Stop it. Hold on, I have to look at something really fast. Ooh. Okay, I have to show you guys something really fast. This is a stock, obviously. It's Microsoft. It's not a future. But Microsoft has not had a yearly reversal since 2009. 2009, 19, 25. So it hasn't had a yearly reversal in 16 years. And what that means is every single year has been a higher low. So Microsoft triggered the year just today. So potentially for 2025, Microsoft could get down to like 212. As long as we stay below 360, 650. It's just kind of a fun fact. Because again, this has not happened. Microsoft has not had a reversal in 16 years, which is crazy. And while I'm thinking about it, Amazon, I called this in 2022. Amazon hadn't had a yearly reversal in a long time either. And you see what happened. It sold off all year and hit the target. So potentially that's what could happen for Microsoft. I just thought you guys should know about that. All right, let's go back to the 30-minute chart. Okay, potential. So when you have a 30-minute reversal, you can take the reversal or you can take a 5-minute actionable signal to trigger the 30, or you can wait and take a reconfirming actionable signal. But we want to mark the level. So this is our reversal level. And then I like to, so knowing that that's my 30-minute reversal, I like to go to a lower time frame, such as the 5, and look for a strat setup that will trigger the reversal. And it looks like we're about to get a 2 up, 2 down reversal. Hopefully it doesn't go 3. That's a giant candle. Because it's the first candle. It's about to go 3. Darn. So that triggers the 30. We could even go to a 1 minute, but right there, you had a 2 up, 2 down reversal to trigger the 30. So that was like, honestly, the best entry. and I've missed it. So let's see if we get maybe another oneer. And it took out these little guys. If anybody was short, they got stopped out above that level. And again, this is the 30-minute trigger, so you don't have to be the first one in. You can wait for a setup on the 1 minute if it's going to give it to us. So we will see. I wouldn't, somebody said long, massive short squeeze incoming. I wouldn't count on that. Don't go 3 again. Come on now. We want the 1s or the 2s. It's going to go 3 again. I don't like entering on 3-2 continuations. Everybody that knows me knows that. But we might have to. We're just gonna this little level there would be T1, 52.62. T2, 52.55. And once this starts getting close to the target, if it does, I pretty much get my stop close to break even as soon as I can, because I want things to work and I want them to work right away. So we got another 2 down on the 1 minute, which means I don't want it to go 3. This might be kind of small for you guys to see, but maybe I can make this one bigger. I'll give it a little bit more room because I don't want it to go 3. So the 30-minute is in force. It's just not like puking. Okay, I'm going break even because I don't like to lose money. It either works or it doesn't. We want it to work right away. Again, T1 is right there, which we're almost at. See, but I'm trying to make it big for you guys, but I need to see what NQ is doing. So NQ took out the lows. ES didn't. So I'm glad my stop's at break even. Just because that's a potential level of exhaustion. So ES could also exhaust, leaving a double bottom, which will get taken out eventually. Yeah, give us another 3, would you? Thanks, Elaine. YOLO it. 100 contracts. Never. And if I get stopped out, that's fine. I will just re-enter. But I'm not letting a green trade go red. And that's how I've been able to stay in the game long enough to learn the strat and see it. So I just got stopped out. So that's fine. If you blow up, you can't play anymore. The 30 is still in force. So yes, my stop was tight, but if we get a 2-2 reversal here, I will short again. This is what we call doing battle. So NQ is going for its second target at like 18,028. What is the 30-minute target? So we did just hit a target. I probably should have done more than just one, because I would take partial there. Come on, buddy. Load up. So we did hit a target, so I'm going back to break even, because targets are potential exhaustion risk. And see, I probably just should have took partials, because I'm going to get stopped out again. You see how we took out this low? That's a target. But again, I'm not here to lose money. I'm here to make money. I'm not, if my entry doesn't work, it doesn't work. And we are quick to get out. Next target, 52.44. NQ, see, NQ just did it again. Took out a low. See where my crosshair is? That's a target. I just like at least want to cover commission, because I can rack up a lot of commissions. There's no gamble in here. We have full time frame continuity to the downside. I just really want some puking, but they're just not puking it. So see, this little 1 minute candle went 3 at NQ's exhaustion level. So probably just we did hit that target. That was one of the targets on the 30-minute that I showed you, but I was hoping for more of a puker, a fast puker. And that was also a major target, because that is the candle that took us outside 60. So the 30 made the 60 go outside, which is part of our multiple time frame analysis and things that we look for. 4 hour, 2 down, so that's good. Let's see if they do something else. Maybe they'll give us a 3-1-2 down, which is also a strat reversal. And I love how I have OCO orders. So like my stop and take profit is right there on the chart. It won't puke. It's about to go 3, so again, I'm about to get stopped out. This time will be for a loss, not break even. That's okay. I'm only trading micros. Maybe we need 5-minute corrective activity because the oneers aren't doing it. I should have paid attention. It was a 5-minute flip. It was also a 15-minute flip. So we just got new 15-minute candles open after taking out these targets. So we might not have anything for 15 minutes. We shall see. Something we say a lot is when things occur matter. But anybody long using this and this as their stop just got stopped out. And again, at levels of targets, that's where we can expect profit taking to happen. And that's why I said it earlier, I should have taken some profit there, but I really wasn't that much in profit. So I was trying to let it ride because I want to come down here to a new low of day. But again, we got a new 15-minute candle. We opened inside. So not much to do here. So we talk about the flips a lot, and the flip is just any new candle starting. You can have, because what can happen is a continuity flip, which is what you're seeing right now. So they were selling the last 15 minutes. You see they opened and flipped, and now they're buying. So we have to always find the flip. And again, I'm not personally taking any longs today. This candle has 2 minutes left in this 5-minute candle. Somebody said, where have you been hiding? I have not been hiding. You can learn the strat from my YouTube channel. And if you guys are on the NinjaTrader Live, if you go to the description of the video, there will be a link to my Twitter account. I will always say Twitter. I will never say X. I heard the boys talking about it on stream. It'll send you to my Twitter, and then I have a link tree up with my YouTube. And then there's a playlist called Strategication, where it's just the strat principles. And then somebody asked, what do the numbers mean? And the numbers are simple. They just identify there's only 3 candle types. There's an inside bar, which is a 1. There's an outside bar, which is a 3. And there's a directional bar, which is a 2 down like this one, it's a 2 down because it broke the previous candle's low. Or you have a 2 up. So this one, this candle here where my crosshair is, broke the previous candle's upside, so that's a 2 up. And so because of that, there's only a small amount of ways price can reverse or continue. I'll pull this up again. Oh, my voice is not happy. So you have inside bar reversals, which is an inside bar break, a reversal of the previous basically color, right? So inside down, you have inside 3 1 2s, so an outside bar, and then an equilibrium that breaks to the upside. Basically played the exact same as a 2 1 2, except this is a broadening formation on a lower time frame. 3s always are. You have 2 2 reversals, which this is a 2 down because, like I just said, it broke the previous candle's low, and then you have a 2 up reversal. So they are reversing the previous direction. This is a bearish 2 2 reversal. This is a 2 up, followed by a 2 down. The target's always the previous candle's low. 3 2 2, again, played just like the 2 2, except this is a broadening formation on a lower time frame. The 1 bar rev strat, the outside candle, opens here, takes out the low, starts retracing back through. We're looking to take out the high. Same to the downside, opens here, starts falling in. We're looking to take out the downside. This is a rev strat, which is a failed, usually, equilibrium break. So the equilibrium being the inside bar, 2 down. It can either take out that low or it doesn't have to. Either way, they're going the other way. This is a reversal of the equilibrium. So like the sellers weren't strong enough, the bull stepped in and took it the other way. Bearish rev strat. This is exactly the same as this. It's just you've got a 3. These are continuations. So like a 2 up and inside 2 up, which is more of a momentum move. Momo hammers, Momo shooters, pivot machine gun. That's a good one when you're at a level of exhaustion risk. It's usually 5 or more. So in this instance, higher lows. So this is a bearish rev strat. So once that pattern breaks, right, because price can't go down until it breaks a previous candle's low, and you look to take out all these guys. So you're triggering a bunch of long stops and short sellers are coming in. So they're usually pretty aggressive. I only like to trade them, though, at levels of exhaustion, like that SMCI trade we took probably 2 weeks ago now. Same thing for a bullish pivot machine gun. You have a high, lower high, lower high, lower high, lower high. When that pattern breaks, shorts start to cover, and then we take them all out, coupled with natural buying. So yeah, this is, you can find this little diagram in my pinned tweet on Twitter. Okay, so we're inside on the 5, nothing to do there. So we're still, that new 15-minute still has continuity green. Going to be hard to turn that around, so I'm not looking to take a short right now. As you can see the flip, they closed there, they opened there, and they started buying. And this candle has basically 6 minutes left. Crudele says, real chop fest so far. Yeah, right now we're just stuck in this leg from this low to this high, trading inside of it. Oh, okay. If you want the Strat indicators for NinjaTrader, which was custom built by Mike Burke. Thank you, Mike. Oh, they're selling it down. You just go, you send an email and request that you want the Strat script, and you send an email to learn@ninjatrader.com, and Mike will send it to you. Oh, there's the 2 down. Shh. Hold on, we want it to go back in force. Okay, so we've got simultaneous 2 downs. I got a late entry because I was talking. It's not easy to stream and trade, people. We're still inside 15. But this 2 down can make us more of a shooter on the 15. So when this candle closes, it's got a lot of time. When this candle closes, so I should have entered here, like $3 higher. But again, I was talking and not paying attention. Who's crapping on learning? Learning's good for you. Oh yeah, Powell does speak today. I don't know exactly what time it is. I think it's at like 2. Let me look. Hold on. I don't want to misspeak. Economic calendar. Powell speaks at, yeah, I would have got, oh, it's about to go outside bar. This is just not the trading day for me. And again, because we already hit that major downside target, I feel like I'm kind of just trying to make it happen. Anyway, Powell speaks at 11:25 Eastern. All right. That 15-minute, about to get stopped out. Again. And there it is. I still don't want to take longs. But that failed 2 down would make me want to flip long, but I don't want to. So, if you were to draw your Browning formation, it would look like this. It looks like they are trying to come back through it. Still need to wait for that 15-minute. So see that they hit that downside target and that was it. So potentially they're trying to go back up here, which I'm just not interested in. It's not that much, and I keep getting stopped out on 3s, which happens. And I don't like trading 3-2 continuation on the 5-minute. I don't like 3-2 continuation. So high, low, no, sorry, low, high, new low. It looks like they're trying to make a new high, but I don't have any confidence in the upside. other than to stop people out. We could try just for sake of streaming. Again, that's why I'm just trading micros. I just don't like that the last 5-minute candle went 3. Maybe, just maybe, there will be a 1 minute, or maybe it's just gross chop because we're still stuck inside that leg. Yeah. We'll see if I can get a 1 minute. But it's just, we're just stuck. So, actually, let's go to the 60. Yeah, so we are right in the middle of a broadening formation. If it goes, let's see. Again, this is why we mine the flips. So green, so buying the last 5 minute, starting this one off, they're selling. So we have a little broadening formation inside a big range. We did, but we do have lower liquidity or targets. So if we can get a 3-1 on the 5 minute. It's just not great trading. Again, like the move in the target hit before I got on again, like the first time I streamed. The second time I streamed was really nice because we got to target during the stream. We're double inside on the 15 minute. That's kind of our range right now. Charles, what is SNDR? Yeah, we're pretty stuck. Oh, I've not seen it abbreviated that way. Gotcha. Well, we haven't had a break in market structure on any significant time frame. Are they going down? We can try it again. But I will have a tight stop, like really tight. Oh, I didn't even move it in time. That was too tight. We'll try it again. Again, not the best. I don't know about that. I might just have to stop because nothing's working because it's not, we're inside. If you guys could puke, that'd be great. This is a target. Not a great one, but it is a target. 60-50. There's just no aggression right now. I don't know. Feels like lethargic. What I don't want to happen is they stop here and then come up, which is 60-50. No, just keep going. Go down, buddy. You guys got to yell at it to puke. Come on, NQ. Take out your low. Come on. Come on. You're all up. Oh, no. You're almost there. 4 points. Come on, NQ. Please puke. So there you go. So again, that's a little level of exhaustion because it's a pivot low and we're stuck inside. So it's either going to puke or it's going to stop there. And I don't want to don't want green to red. I want it to. Did we trigger the 15? No. I need it to trigger the 15. See this inside bar? I need it to go below 50.75. Otherwise, I'm just going to get chopped up in there. 15 minutes left. I really want it to come back down here. Come on, give me 50.50. Okay, so either way, it's going to be good or I'm going to get a paper cut. That is how I trade. That's the single mom way of trading. Keep your money. No big losses. We don't do that. Come on now. $50, $75. Oh, it's a little ways. But you see, so what I did there was I took the 5-minute to potentially trigger the 15-minute. The 15-minute is right there. And mind the flip. That's a target. Come on. Oh, it did trigger the 15. So if I had more contracts, I would take one off right there. So maybe we'll just see how it's reacting there. Maybe I'll just go to the 1 minute. If I get a 1 minute reversal, I'll come on, dude. If I get a 1 minute reversal, I'm gonna move my stop. Hold on, how many? 13, 12 seconds. So I'm gonna put my stop here because I don't want to get taken out on that exhaustion level, and I can lock in like whatever, I don't know how much it is, because that's a target, right? So if reversals are going to happen, that's where you're going to see profit taking. Okay, so they're going 2 down again, so this should not, I don't want it to go 3, so that's why I put my stop a little bit lower than that candle's high, because if it fails and goes up, it's going 3. Finally, we got one. So 68 to 52, 52, 62, 16 point. And if you're trading minis, that's quite a lot. I'm never trying to trade minis on stream. Too much pressure. This is already pressure. I don't need more. And then we got another target here at like 31. Okay, I'm again gonna trail my stop down. Super tight. Keep going. We like 2s down. Okay. We got something. That's nice. And again, that's a target. And then low of day is a target. But I want to lock it in. I want to pay for my stop outs. So I'm just trailing down on the 1ers, which is a strategy. You can trail down on the 5ers. You can trail down on the 1ers. If you're trading micros, 5ers are nice. Minis, 1s are nice. But you see, like, we want it to go right away. And we get out if it doesn't. So I feel like this is a good example of that. I might just get out there. Unless I get stopped out here, but that's fine. I'm in profit. 45. It's like 23 points. Sorry. I need to see the other time frames actually. I need to do it quick. Come on. Come on, come on. So see, this is a target. That's why I've got, well, we're like, ooh. I'm just going to keep trailing on the 1ers. Two down in green. Potential outside 1er. Ooh. We're so close to that target. I see you guys are in the chat talking, but hold on, I'll be there in a minute. And this is a really simple strategy, just trailing down on a time frame. It keeps you in because we know, again, price can't reverse till you break a previous candle's high, right? This is probably going to be like a giant shakeout candle. I hope not, because I want it to go take out this. And I mean, everybody trades differently. Like I see people. So the thing about the strat, right? People, let's see. Regular traders, I guess. I don't know how to say this. Okay, now I'm going down. Regular traders use a stop and they're like, oh, I've accepted this risk. We do not. We get to break even ASAP. You know what I mean? Like, our stop is not meant to be like, we accept this risk. Our stop, come on. Our stop is like, no, you're not taking our money. We're taking yours. I don't know if it broke it or not. This line isn't labeled, so I'm kind of a little blind there. So what do we got? 37 points. That's cool. This is just one micro. Bust that bitch. Okay, I'm tightening it up. Again, potential exhaustion level. Oh, damn. What was that? Ugh. I'm pulling up my other chart. All right, so we're almost at low of day from that 5:15 domino entry. Sorry, I call them dominoes. Domino means a lower time frame to trigger a higher time frame. I'm not getting. It's 2 down in green at a level of exhaustion. Why does my stop look like that? It doesn't look like that at home. I think it's fine. It's turquoise at home, I think. And this is, okay, I probably shouldn't say that. Well, I was going to say, this is why they say girl traders are better, because we are much more risk adverse or risk conscious. Okay, I'm out. I don't know how many points I got. Like 30? I don't know. Somebody who was paying attention can let me know. Yeah, trailing 1 minute highs is great. I could even get back in, because if we get a 2 up, 2 down here, we're still trying to go to low of day, you know? And if you're looking at, sorry, again, so that was a target, right? So that's why I was so tight there and also here, because they're targets. And like I keep mentioning, if corrective activity is going to, so see, they just stopped out this 1 minute little high. So you might get a 2-2 back down and then hit low of day. Yeah. You don't, and I could even just take a continuity entry right now. So we had corrective activity on the 2 minute, or sorry, the 1 minute, and then we got an inside in 1. Like I could literally do this and put my stop there, because we had corrective activity. This is a 2 up, so I'm hoping it triggers the 2 down. 32. And if it stops me out, whatever, it's nothing. But if I can get down to 52.11, then that's great. 11 1/4. So I want this to close and go inside down. If it goes inside up, I'm peace out. So I move my stop because I know what reversals look like. I want it to continue down. I want it to go 2-1-2 down. And we got a new 5-minute flip coming in 40 seconds. Okay, and that's fine. You know, teeny little loss. but I don't want to see him going up. I wanted this to go 212 down. Was that an early entry? Yes. Should you take it? I mean, you can if your stop is tight and you think it could continue and go 212 down. But technically, I didn't get the actionable signal because we didn't break that candle's low. So maybe we will on the next one. What's the 5 minute look like? Okay, so profit taking at what? Our target. That was our first downside target. New 5 minute candle. Probably more profit taking. So now we wait because this is gonna, it's likely can be 5 minutes of buying, or it's gonna fake them out with a hammer. Let's see if we get a 1 or down. I'll try one more time on an actual 1 or down if this would load. Okay, no 1 or down. They're still taking profit on the 5 minute chart. They went 2 up on the 5 minute chart. Ooh, I like a shooter. Ooh, they're going to give us an outside fiver maybe. I don't know. We'll see. Low 36.50. Inside 1er, 2 up, more 2 up. Nice. Nice D. He got 10 points. I'm not an ICT trader. I've studied it. I use a couple of concepts, really just midnight and like new week opening gap. Low 38.75. $38.75. Is that what I said? That might not be right. So you see how every candle is a high or low? If that changes, I want to 38.75, 38.50. Oh, new candle. Low. Okay. Yeah. See, so that pattern broke. So a bunch of higher lows. I don't want it to come back. So my stop is tight, right? I want it to go outside on the 5 minute, which means take out this low. I got 2 minutes. Okay, I'm already up like 5 points. I'm getting tighter. So see, again, when we take trades, we want them to work immediately. Immediately. I don't care. I'm not here to make a crap ton of money. I'm here to teach you guys and help you not lose money. My goal of being on here is not to make I almost said the S-H-I-T word. It's not to make a boatload of money while I'm streaming. It's to show you the strat and how it works and how we put ourselves into winning positions immediately. Because, I mean, somebody on my last stream was like, you can't expect to be break even all the time. I'm like, yeah, you can. It might take 60 seconds, but break even that. Okay, my language today is, sorry, I apologize. Break that low, boy. So I either make a lot or I cover commissions. And I mean, what better position to be in? Am I right? Yeah, Shab, I probably should do that. We might even get an ad. Ooh. Although I don't like inside, I don't like continuations. I want corrective activity. I don't want inside and up. I want inside and down. Probably going to get stopped out, but that's okay. Give me a 3. I'll take a 3. 3. No, go down. Go down. 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 Come on. You guys got to yell at your charts. What do you guys think of the headset? Do I look weird? Can't really see myself. Puke. Do it now. Go 2 down. 2 down. Come on. Go. No. Down. Down. Do like NQ did. Down. There you go. Thank you. NQ's target is 17,926-ish. Come on. Okay, now I can move my stop because this is corrective activity. It's a slight 2 up. So I'll make 5 points. I'm locking in no matter what. Which on a mini is 250 doll hairs. Break the low. Break it. $32. I think I'll leave it there. Puke. No. Down. It's trying. ES is trying to. Somebody's trying to buy the dip. Oh. ES likes to do this. Make double bottoms before stopping. Before actually really puking. Ugh. Okay, I'm bringing it. I'm bringing my stop down. So I'll make 9 points now. 9 points are like 30. Hopefully 30. But whatever. Whatever happens, happens. Don't you dare reverse. So we made a new low, which is always a level. Oh, 2 down more. We're moving it down more. $28.25. $27.37. 13 points. Okay, NQ just hit its target, so we want to see it keep puking. 26.25, what is that? 14. But see, you just got to be on the right side, right? You know? Give us low of day. And I have my limit set a little bit above it because ES likes to be an a-hole sometimes. All right, we got a 1 minute flip. Come on. All right. It's trying to go 3. I'm about to be out for, what, 17 points. Because like I said, ES likes to be a little a-hole. Yeah, no, fine. Go 3. That's fine. Okay. Any questions? I look like a teacher. Is it my glasses or my shirt? I don't know how I feel about that. I look like a teacher? Ooh. Ooh. I am a teacher, though. I'm a Strat teacher. Oh, I wish you guys could see the back of my shirt. It says, so on the front, it says the Strat. And then it says, live it. No. Love it, live it, teach it. What is it? What is this question? Is it normal to have to make peeps every time you make plumps? Definitely. Whatever that means, yes. I might have missed. I look like a radio DJ. Oh, wiki. Come on, give them low of day. For the not so tight stop people like me. I'm a tight stop girl. I wonder how many points I made on, I don't know. I forgot. There was a lot of trades. Did I have 2 trades? Did I have 3 trades? I don't remember. Again, if you want the indicator, email learn@ninjatrader.com and somebody will personally email you the script. But the script means, here you go. We're about to get low of day. Sorry. The script will mean absolutely nothing to you if you don't understand the strat. And let me also say, guys, the strat is a lot more than just the setups. And it's so funny. I've been doing this for such a long time and people are like, the strat doesn't work. And the reason that people say that, okay, so first of all, I wish you could see what I'm pointing at. You can't. Everything on the left side, so like inside bar reversals, the left side is bullish, the right side is bearish. 2-2 reversals, bullish reversals, bearish reversals, yada, yada. But so when people say the strat doesn't work, it's because they're taking bullish setups in a downtrend. You don't do that. You let the bullish setups happen, right? So like you let a 2-1-2 happen, and then what do? Then you take the short rev strat back down. Because people love to be long bias, and that is just the dumbest thing ever. And that's why higher time frame analysis, full time frame continuity, if all of the time frames are red, do you think you're going to nail the bottom on a 2-1-2 reversal? No, you're not going to. So people will be like, oh, the strat doesn't work. Well, no, you just don't know what you're doing. You're trading the combo sheet, which is not the strat. Like, this is such a small part of the strat, okay? And you're going to get burned if you're only trying to trade this sheet, okay? You have to take into account full time frame continuity, broadening formations, where you are at in the broadening formation, multiple time frame analysis, domino setups, which again, dominoes are my favorite trade, which is a lower time frame setup. And it can be, so for instance, right here, no, I don't know what I took. Right here, let's say you have a 312 down on the 5-minute chart, which can trigger a 312 down on the 15-minute chart. It's really cool. It gets you in earlier. It gets you better RR. But that's what I like to do. And I do this all the time on stocks because I trade stocks, I trade common, I trade options. I prefer common. I'm not wonderful at options. But that's why futures is great, right? You don't have to screw with the Greeks. But one of my favorite strategies, especially on a Monday, is taking a daily actionable signal that can trigger a weekly actionable signal. I also don't hold. I'm a terrible swing trader. That's fine. That's just who I am. I don't like it. I've tried. I don't like it. Sometimes it's cool, but I really just don't like it. But anyway, so I will take the daily trigger and then I will exit at the weekly trigger, because something that a lot of people don't understand. Oh, we hit a new low of day on ES. Who would have thunk it? What was I saying? Okay. So a higher time frame trigger is a lower time frame target. So higher time frame triggers are areas of potential exhaustion. So that's why I do the domino trade. On ES, I put on Twitter, we took a 15-minute reversal at the bottom of a broadening formation because we were expecting a 2-up day. What's that next level? Hold on, let me shut up. Where are we going? Hold on. 51.77.75. Need to break 5,200. Quit trying to bid it up. I do not use DOM. I do not use anything. There might be value in it, but to me it's all noise. So we hit our intraday target. See, so 52 psychological, like that might, be a little bit of a pain. But we're heading for 51.77. Okay, I'll just say 51.78. It's easier for my mouths. What else was I saying? What time is it? Oh, wow. That was a fast hour and 40 minutes. Boom, 600. Nice job, Josh. Pax is calling for low. I mean, we should go low. Yeah. I'll have to do that when I'm not on stream. I don't want to accidentally show my account info. Yeah, Solanke said, to be good at the strat, I always say you have to be forward thinking, but this is correct. If this, then that. And something that we always say all the time, if this works, if this setup works, what will that create, negate, or do to the higher time frames? Like, can it, if you take, for instance, like a 60-minute reversal to the downside, what will that create, negate, or do to the daily candle? Will that change continuity? Will it make it go potential outside bar? Potential outside bars are also, so I love, my two favorite things, I love domino trades, which I've talked about ad nauseum, I feel like, and I love potential outside bar plays. And they're really awesome and they're really easy. And I think I showed you guys earlier in the stream how they work. And this could be This could be on any time frame. You could be a 5-minute outside bar sniper. And here, real fast example. This is a 5-minute chart. It could be a daily, it could be a weekly. It all works the same. But when your actionable signal fails, I'm just using this because it's easier for me to draw. So this is it. I actually got stopped out here. This 2 up, 2 down failed. So what happens? That trigger candle becomes your range. So now that it failed the downside, where is it going? It's going up there. It's going to take out the high. It's going to become an outside bar, most likely. Sometimes it stops a little short, but usually on the next candle, it'll go up, hit the target. Same thing here. Where's more 3s? But if it fails to stay below, that's why our stops are so tight. And that's why I say, you know, we want things to work and we want them to work immediately because we know what we want to see. But then what? Then I got back in, I think right here, because I saw what I wanted. So 3, stop people out, me included, fine. 3, 1, 2 down reversal, target 1, that pivot low, look left, target 2, that pivot low, corrective activity, can you expect that at targets? Yep. Target 3, low of day, boom. So they still are holding 5,200. But anyway. Break it. Come on, give them 77, give them 78 within 19 minutes, please. We just got to break 52, which I feel like it will. Psychological levels aren't that important. I mean, I guess there's like a lot of orders there and whatnot, but targets are what is more important. So maybe we'll get there today. Maybe we're not. I'm done trading. I think that was enough. If you want the Strat combo sheet, it's in my pinned tweet on Twitter. Don't listen. Don't tell people to buy anything. This is not the time. Thanks, fat fish. And let's look at the trade again. We'll go over it. What happened and why. Sorry. Still sick. So let's start at the 60. So we had corrective activity. So we hit a major target, again, on the weekly or daily from August, I think. Okay. We hit it 52.11 and a quarter. We hit it by 2 ticks. So that's, again, why I'm so adamant about taking profit at targets. So then, like I say, you can expect corrective activity to happen here because that is where profit taking is supposed to happen. So anybody short needs to start buying to close, buy to cover, right? They have to get out. They're taking partials, they're taking profit, as they should. That's exactly where they should do it. So you can expect corrective activity. But the trend is still down. We have lower targets. So we let the corrective activity happen. You know, we're taking profit down here with them because that's what we're taught to do. Like, we teach to take profit at your targets. Like, I scream at people in a nice, cute, fun way. Not like, well, I yell at Tom a lot. Tom, if you're on stream, I'm sorry, but you need it. Tom's problem is greed. I do not have that problem. So anyway, all right, so they took profit down here. Corrective activity. And then I entered somewhere. I took a 5-minute. So we had a 3-1-2. continuation down. Do we, like, that's something that we look for. That's a strat setup, right? Here, I'll show it to you just so you're not like, what is she talking about? 3, now I don't care what color it is. I know what a 3 is. 3, outside bar, inside bar. They've picked a direction, is all that tells you. So they stopped people out. They made a rounding formation, consolidation, direction. So the 2 down. So we wanted to be in on that 2 down. And again, I am a domino trader. I like the better entries. So I took what? I took that, again, this is beautiful because it's so fractal. So the 15-minute was a 3-1-2. There we go. They broke 5,200. So the 15-minute was a 3-1-2 down. So I took the 5-minute 3-1-2 down, right? Well, that's where the line is. So we shorted here. I might have even took a 1-minute to trigger the 5-minute. Like, that's how intricate it can get. You just have to know, you got to look at all your time frames. So I knew I had a 15-minute. I knew I had a 5-minute. Let's see if there was a 1-minute that could trigger the 5-minute. So this is how, like, dominoes can get crazy. And you can do it like that with all the time frames. You can do an hourly to trigger a daily, to trigger a weekly, to trigger the monthly, to trigger the quarter. Like, you can do all those things. Give them 78. We're still going to learn, though. Okay, so that was the 5-minute entry. You could have entered somewhere right around here. So this failed 2, going 3. Boom. All right, I want to see. Did we hit 78? Come on, baby. Give it to him. Give it. Do you guys get this excited about charts? Come on. Where's NQ going? That's a ways away. Do you think 5120 low from last August is in play to 5120? I don't, let me look. That doesn't sound familiar. Hold on, let's watch 51, 77, 75 break first. That'll just be fun. It's like you have a crystal ball when you have the strat. There it is, boom. People think I'm magic. I'm like, I'm not magic, I just understand the strat. Look, are they taking profit? They're trying to. That's, again, where people who are short should look to take profit. But you can trail, you can stay in until you get a 1 or against if you're, like, trying to be that tight. Cool, cool. Glad you guys are having fun. All right, let's go look at your 5120. I'm not sure where you're getting that. Okay, 5120 is not a major target whatsoever. I like, if we're looking at the weekly chart, the hold on. You got more. Oh, that's not my I need my label line. Hold on, sorry. So we had another really awesome Friday stream where price went exactly where we called it to, which is awesome. And that's just it. Like, the proof is in the strat. The proof is in the charts, right? Like, anybody can post a P&L or fake P&L, but when we tell you, like, weeks ahead of time, price is going somewhere, like, that should be all the convincing that you need. Oh man, I ran out of data. Hold on. I did this earlier. Work, please. $51.20 is not it. It might be the low of a wick, but not like a super cool one. I don't think it likes 1,000 days. Shabby. Yeah. All right. It doesn't like it. It won't. It doesn't like when I want more info. Say that again. Okay, cool. Thank you. I'm talking to the people in my head, guys. Just kidding. Not really. There's people in my ear. Yeah, keep it on not the screen for a moment. I don't know what's going to happen here. All right. We're back. We're back. No worries. Okay, we're not. Okay, maybe we don't go 1,000. Maybe we go. This is my one gripe with like futures contracts, like the continuous or the quarterly contracts. All right. Okay, that's dead. Look at what's happening. What was the level? What did we say? 51.7775. Oh, dang. So let's see. Okay, I'm just going to do 58. Let's see if you could have trailed. Sure could have. So if that became, so that was the target, right? You can take profit, you could take partial, and then what? You can trail. Oh, that might have been a 3. That was a 3. Well, still, you could trail. But now look at what's happening. They're taking profit because that's where they should be taking profit. And I bet they're going to go stop those guys out up here. Because there's nothing else nearby to target. So this is where people who are short have their stops. And it looks like they're going to go smoke them. Because if they didn't take profit here, they probably should have. Because now they're going to run their stops and they missed out on that profit. That's just how it is. That's how it works. If you don't take profit at your target, we're coming for your stops. That's where corrective activity happens. A big outside fiver, right? 15-minute, look at that hammer. Because why? Because we hit the weekly target. Like, There's nothing else near. I traded it. You just missed it. Yeah, that's okay. Yeah, you guys should learn about it. The strat, I mean, the thing is like we don't guess the strat. You have an entry, a stop, a target. You know exactly all, you have your trade plan. And we don't, like I said, we don't guess. We don't use moving averages, not to talk crap on people who do, but it's late information. Yes, like I guess algos and stuff buy it, but what is funny to me, I've been trading stocks since what year was that? 2018, because crypto mooned in 2017 and then puked in 2018 and I couldn't short it. So I was like, well, what do I do? So I went to stocks in 2018. But it was so funny to me because I learned the strat in 2019. But every time I would see on Twitter, like, oh, the death cross. Like, the death cross happens when we are at downside exhaustion and the targets are all hit, and that's where the reversal happens. But people are taught to like short the death cross. The death cross is usually the bottom. So again, why? I mean, we don't need indicators. Like, we don't care. I don't even need volume. It's just on my chart because I like the way it looks. They're pink. And we like, it's so funny as a community, we like want to teach like a famous investor how to trade the strat, like just using yearly and quarterly charts. She'd be the best investor of all time. It can be that simple. Thanks, Tracy. Shy. The email again, if you want the strat indicator, but again, you have to learn the strat. You have to study the strat. If you just try and trade the strat combo sheet, you're gonna get hurt, I promise. So don't do that. If nothing else, just trade in the direction of the trend. So wait. So obviously we're in a bearish environment right now. If you're going to trade anything, trade just the bearish setups, because we're not changing that anytime soon. What I tell you here, let's go see. They're going to stop them stops out. I think the level was 77.75. So, well, I guess stops. I like that as a stop, but you got here and here. So people who didn't take profit here, I mean, they're missing out on like 39 points. I mean, it's going to get them. It's going to get them. And again, we expect this to happen here. It should happen here, because that is where you properly take profit. And that, there we go. Go get them. Got them. Got them. So that could even be a scalp for you, because you know you're at exhaustion risk. What's exhaustion risk? When you hit all your targets, there's nothing else nearby. Where do you get in? On a 2-2 reversal. A 2-2 reversal, is it on the sheet? It is. That's a 2.5 to 1 RR. And then you saw what I did, right? My stop doesn't stay. Like, once we go, my stop is tight, because I expect it to go immediately. I expect profit taking to happen. I expect short covering. That's where it happens. You see what's happening here. The longs are now taking profit because they hit their target. That's what's supposed to happen. So it's fun time, fun time.
Hey, Sarah.
Hey, Jim.
Great job today.
We had
This
a
is
good
back-to-back
morning.
Fridays. Back-to-back Fridays where you are on fire. That was awesome trading today, and really great.
Thank you. Yeah, it took me a couple tries, but that's all right. We don't mind that.
Well, that's okay. Persistence is the name of the game sometimes, right?
Oh yeah. Well, and also saving your money. So if it goes great. Move your stop to break even. If it comes back, knocks you out, fine. Take the little, whatever the commission is. The commission's not a lot. And then get back in. Try again. If you know where you think it's going, keep trying. Don't sit there and revenge trade. But
There you go. Well, Sarah, appreciate you today for sure. Looking forward to next week. In the meantime, you have a great weekend, and we're going to keep moving on with some midday market updates right now.
all right. Thanks, Jim. You have a good weekend too. I'll see you guys next Friday.
All right. That was awesome. That was hit the like button. Come on, hit that like button for Sarah. She is unbelievable. Thank you, thank you, thank you. All right, so let's kind of revisit some of the stuff that me and Pax talked about this morning, and then we'll look at some more markets. And in a little while, Shai will be here with me talking about hot commodities. But right now, I'm looking at that daily candle chart for the E-mini S&P. And these blue lines here, these are PAX lines. I'm going to call them PAX. I have even a tab at the bottom of my chart book called PAX. So, I mean, and it's powerful stuff. It really is powerful stuff. But, second day of massive sell-off today. The E-mini S&P is down 3.86%. or 206 handles. Now, this is moving quickly. There's a lot of momentum going on here, and price is changing pretty fast, but which is not surprising. We have about 1.6 million contracts traded so far on the E-mini S&P. If you remember yesterday, I think we hit 2.4 million on the E-mini S&P. So another really big volume day, especially on a Friday. I know it's non-farm payrolls came out, which usually gives you that extra spike, but this is above and beyond that benchmark, if you will. So it's an amazing day again. We have a little bit of a wick though on the daily candle, which is pretty good. Let's see where it tagged it at the bottom here. I'm going to expand my axis a little bit. And we achieved that 100% fib extension levels. I love fib extension levels on trend days or on big trends in general. 5170 was the price. The low of the day actually almost touched PAX's 5146, but it did get to that 5160 as well. So buyers came back in, decent sized wick actually. Not even close to the halfway point on the candle high to low, but we're kind of moving up there. I would use that 76.6% extension as kind of a target from a big picture point of view, if you will. If you think this is going to continue, I don't know that it's going to continue, but 53.26 is that level on the E-mini S&P. And this first circuit breaker didn't happen, so I can delete that. That was the overnight one. Didn't quite get there. And then just to bring my axis back down so you can kind of see the full picture here. Let's see where we are here on the, so the 20%, we didn't get the 20. We're nowhere near that 20% from the highs, the recent highs, till now. I'm going to call it a drawdown point of view. I'm not going to use the word correction. I don't like that word. But if I had to adjust this a little bit, so we are down approximately 15% again from that high that we saw in February. Just kind of let's drill in a little bit and take a look at I'm back to the 10-minute chart thanks to Stowe and Company and Leo. Let's take a peek here. we have, a lot of times some of the gamma levels are a little bit, they're dynamic when you have a big move today. So really the pivots are kind of in play. And the pivots are extraordinary because, it's based on the previous day's range pretty much are what pivots are based on. So this kind of profile is really neat though. And what we see here, I have to see this little rectangle. We talked about this morning here. I'm just kind of highlighting this volume weakness on the volume profile, right? The top of the value area is approximately 53.16, and this is the value area for the session. It's not anchored to the New York Open, and that's a pretty and that's a shelf, man. I mean, this is like it doesn't taper. Volume's not tapering off up here. So above that, when my crosshairs is above 53.17, that nobody was interested in doing a deal, right? It was kind of a low. It was a quick and it was a low volume value proposition at this level. I'll just move the rectangle over a little bit more so you could see it. And then you hit this early morning little volume, node right there. But the significant volume node is down here. It's the value area, what we're looking at, that dark orange, and the point of control is kind of in the middle here at 52.77. So right now in my mind, it's like we're trading between S3 and S2 for sure. These are the daily pivots. S2 is right at the top of the initial balance, and we have a single breakout on the downside. And S3 is really held. It was, I love these daily pivots, especially when there's no other targets down there on an intraday chart. You can compare this to PAX lines, and when they're in line, they're in line. So this was a great, we bounced right off it. Buyers came back in. We wicked through it a little bit. I'm not surprised, right? I'm not surprised we wicked through it a little bit. Sellers tried to get that breakout trade going and keep moving, but no, it failed. So we kind of popped back up. And right now we're kind of, if let me adjust my fib line. Geez, I should probably do that. A couple ways to look at fibs in this particular case. So I'm just gonna look at that you know, really the initial balance, right before that initial balance, just to kind of dig in here. Because once we break up, if we do break out above in this kind of volume node, then there could be a lot of momentum going up. A lot of times when you see these low volume areas on a daily or on an intraday chart, going back, this is a really nice area of resistance. But then if you break out through it, up and above it, it can kind of cut like a knife through butter up here. So that's why that's also on my radar screen. But right now, this is serious amount of resistance. S2, initial balance high, top of the value area. So that's kind of where I anchored the latest trend is high to low, right? This is the latest trend. This is how I put my fib. You can do an outside fib and take into account the whole day, but high to low. And I'm just kind of watching this reach, how far are we going to retrace, right? And this candle isn't closed yet. We've got 2 minutes and 20 seconds left before it closes. But, we're literally, we wicked through the 50%. We wicked up to the 61.8%, but sellers brought us back down. Pretty quickly here in this candle. So this is looking to me so far like a failed move back up. It was a failed move back up. So again, I'm not optimistic that we're going to get above that S2 level on the E-mini S&P anytime soon. Of course, that's my opinion. Who knows? But that's what is happening here in the E-mini S&P. Can more lower lows happen? Yeah, sure. Why not? But right now we're just kind of hanging tight, going into the lunch hour too. So volume will be a little less, as we know. But let's go ahead and toggle over to the NASDAQ. NASDAQ seems to be a fan favorite, by the way. I've noticed that. Again, we have, the first PAX number way down here at 17,212. And, it looks like we're on our way. The fib extension numbers, we've achieved them all except for the 100% and then the 123% on the downside. So the 100% is right above PAX's number. So it kind of gives me like two areas of interest, which I think are important. So 17,321, if in fact we do start breaking down to the downside. Now you can see the wick on the contemporary candle, the one we're in right now, there is a wick at the bottom here, but it's not as pronounced as the last wick we saw. So, again, a little bit less bullish here, more bearish on this. And just to take a measurement here, the NASI, I can call it the NASI, right? We're down 19.54%. So we need another 0.46% before you guys could say we're in a bear market. NQ is the Widowmaker. That's from another CAGs in the chat. It's well, that's why we have micros, right? These micros are great. Look at the volume in the micros. I mean, the volume in the micros are almost 4 times greater than the volume in the classic E-mini. The E-mini's got 557,000 traded. The micros are 1.9 million so far. That's a ton of trading activity. That's a lot of volume. So it's, and even with the micro, remember, there's a lot of risk here. So be careful. I'm not suggesting there's not risk in the micros, but it's 1/10 the size. So it could, it's a different animal. And by the way, why are you not in the car? Just a question. Cax. In any event, yeah, we do have Chair Powell talking at 11:45. I think no, 11:25. So shortly here, and he's talking to it's like a technical writing conference for business writers. So which is kind of which is a weird group, you would think, but he'll talk about the economy for sure. He'll get into it, is in my humble opinion. So be on your toes at 11:25 because he is a market moving phenomenon right there. All right, let's get into a 10-minute candle chart here, just to kind of see what's going on. So we have a double bottom here. This was a really good formation. Let me just expand this a little bit so we could talk about it better. So this is a double bottom here. And let me just draw a rectangle. It's because what I do, and I'm going to use the wick today. Why not? So lowest body of a candle, right? Matched up with that icicle wick, that target wick that we saw right there at the bottom of the value area also. And it stopped, right? We didn't get that breakout to the downside. We didn't get that. Why do I have a gap there? Let me just do this real fast. Sorry about that. Every once in a while, I'll refresh that data, folks. Wow, it happened again to me. My bad. But in any event, we just bounced there, right? Boom, 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 and then buyers took us back up here as well. So that was when this happens, is it a double bottom? Is it going to hold? Is it going to be? Is it going to break on through to the downside? I'm surprised it didn't break through on the downside, but that's a good sign, right? That's a good sign because if you look at the volume profile all the way on the left. There's a really nice volume node here, point of control, pretty firmly entrenched right there around 118, 143. So that's kind of a possible magnet attractor right now as we're going into this kind of lunchtime hour. That's kind of the story of the micro NASI. Let's move over to the Treasury bonds though, and the Treasury notes. I'm going to cover both of those really quick. And we're going to go to ZB's Treasury bonds. And today we had a pretty big high to low range. Let's see what the high to low range is. It was, the low was 119 and 14, 30 seconds. The high was 121 and 27, 30 seconds. So that's over 2 handles, right? That's almost 2.5 handles, two and a third. Handles or points, high to low. Now we have a big wick on the top of this candle here, so sellers are kind of pushing this back down, and we're still way above area support. But the fact that we have a big candle here is interesting and kind of encouraging, right? We'll see where we close, but the bigger this wick on the top is, the more potential for a stall on the upside. I'll just say it that way. So we'll see as the day goes on. And what does that mean? Well, if the bonds keep going down, right now they've been really going in the opposite direction of the equity market. So it could give us a good tell, maybe. of what's going to happen with the equity market if this does turn around. But right now it's pretty powerful. And if we look at the let's pull up the bonds charts again. I got that crazy gap, so we got to ignore that. I don't think I could fix that right now. Let me try. No, we're going to keep rolling here. Let's try to refresh it just one more time. Refresh. Yeah, I must have had my computer off. But in any event, um, hang on. Hang on, everybody. Where's this thing going to pop up at? All right. We're going to do a little chart dynamics if I can. Of course, we might not be able to. And Kevin, if you have the kinetic password for today, just shoot it over to me. Then we could do this. I'm not seeing it in my email. But in any event, so we're trading down here at 120.23. Let me go ahead and put a retracement on here. Low to high. And yeah, we're right at that 50% retracement, but we're also at the bottom of the initial balance. And look at this volume deficit on the left-hand side. It's pretty, I'm going to use the word extreme, right? So I'll do another rectangle over here. Just focus on the left for a second, and you'll see a big kind of volume deficit shooting there. And we have literally a shelf again. This is another shelf. So this value area is pretty good right here. The point of control isn't dominant, right? The point of control is like almost the same volume, right? 40,519 versus 39,641 up top here. So it's kind of a rectangular type of pattern here that we're seeing right now. 30-year Treasury bonds. Let's go. The 10-year notes are going to be similar. 10-year notes are up. Just looking at my market analyzer, they're up less than a handle. Let's go to a daily first. Well, let's stay here in the 10-minute now. So, well, no, we'll go to the daily first. Let's just kind of shoot over there. Same thing. Big wick on the top. Big wick on the top. Suggesting maybe this trend up here is slowly starting to slow down, slowly becoming exhausted here. I do have my line in the sand at 112.03, which, yeah, pretty give or take a couple of ticks here. And that was that high wick that we saw all the way back in March on March 4th. So we'll keep an eye on that. I'm going to try one more time here. Hang on a second, guys. All right, I think I got it. Hang tight, hang tight. We're going to switch data streams really quickly here, and we'll be back on our feet in a second. So the NinjaTrader desktop has the ability to have multiple data streams, right? And I'll just show you how to do it. I mean, this is the control panel here, and also show, someone asked about time zones. I could also show that. I'm just going to go to connections, and I'm really quickly just going to hit configure, and then I'm going to add my kinetic feed, and I'm going to go ahead and paste that password in there really quickly, hit OK, hit OK. And so now I go back to connections, and I double click on my kinetic. I have a couple of options here. Well, doesn't like my username and password. Does not like my username and password. Hang on, let's try another one. Oh, I copy and pasted the wrong one. One more time. Connections. Configure. 2 times the charm, folks. This is going to do it. Apply. Okay. And then double click. And I got the green dot here. So now when I refresh my data, let's go to a 10-minute. Hit that refresh. I'm pulling in data from another. I know I'm like risking my reputation here. Reload all historical data. Boom. No. One more little in-house connection here. Hang on a second. Now let's try it. Third time a charm. Third time is a charm, folks. Apologize for that. Thanks for being patient with me. So the other data stream was having a little hiccup, so I switched to the kinetic feed, and now we can see complete candles. Thank goodness. So anyway, the 10-minute intraday Treasury note, you could see big sell-off happening. We just broke below the previous session, the initial balance. Low here. So now what am I expecting? Well, I'm expecting maybe some more rotation in the positive direction for the equity markets. This is kind of, these purple lines here are signifying the London session, which was pretty neutral sideways. We have R1 on the bottom. We have that one-day max that we've already blown through, which is also a target. That's a Menthor Q target as well. And then even further down, we have JAX1 and JAX2. And the last thing I'm going to do to complete this kind of picture is go ahead and add a fib retracement. And again, we'll go low to high. I'm going to do the whole session this time, and then we'll go ahead and kind of narrow it down. So looking at the whole session low to high, that's what I call an outside fib. And we're kind of just south of that 50% retracement. We didn't tag the 61.8. And the reason I do outside fibs is because I like to use those as kind of momentum possible reversals in direction, right? As soon as we have a candle close below that 61.8% and we get a little bit more confirmation on the downside, then I'm thinking, all right, the trend was positive for a while. Now the trend is negative. So that's why that outside fib is important to me at that 61.8% retracement. But again, we haven't even wicked to it yet. We're not there yet. We're kind of stalling at the bottom of the initial balance and at the 50%. And two things to notice. One, the point of control is up here at 113.22. And then number two, we have a little volume node here. It's not so subtle. Maybe it is a little subtle, but I could see it. That's around 113.10. So, one train of thought is, this volume is going to get filled in, right? We're going to get volume that's going to get filled in so that this become a normal distribution at some point in the day. Don't ask me why that's a possibility, but that oftentimes happens where these volume profiles in these bigger, more liquid markets tend to smooth out over time. Again, that's just kind of my experience on that. I didn't see that. Try 1, 2, 3, 4 for a password, or 4, 3, 2, 1. I tried password and that didn't work. Oh my goodness. Oh, let's go back to that micro NASDAQ now that that gap is gone. All right, here we go. Again, 10-minute S3. Again, perfect wick through. We have we have about 8 minutes left in this candle. This again, 10-minute candle. Let's just kind of dissect this a little bit. Double bottom has been breached. Sellers took over. Now buyers are trying to push this back up. That S3, I love these pivots along with some of the gamma levels and along with the fib numbers. And these things kind of happen sometimes. And in this case, it doesn't always happen. But to wick through S3 after a huge range yesterday is unusual. So we did wick through it though. Buyers came back in and we're creating what's called an equal and opposite candle. And that would be where pretty much it is what it sounds like, right? You have a red candle and then the very next candle is green and about the same size, or vice versa. It could be a green candle and the very next candle is red and about the same size. Now we haven't achieved that yet, but we're trying to achieve it yet. And that could also be interpreted as a bullish signal. Now, the other thing you have to consider is, hey, this is the bottom of this white line here. This is the bottom of the initial balance. And then go a little higher, that red line there. That's the bottom of, if you wanted to say opening range is 30 minutes, that's the bottom of that. So these are two levels that are kind of in the way, right? It's kind of in the way of some more upturn. So let me just adjust my fib again to adjust for that. Wow, what a move. What a move in the NASDAQ. Let me just kind of put this in perspective. So that's the outside fib. Let's take a look at the recent trend though, right? I'm going to delete this. We'll do another fib line real quickly. Go to the pencil, go to the fib retracement. Now I'm going to pick off again the high. This is a little bit pre-market, but I'm going to use that wick. Or you don't. I mean, it doesn't have to be exactly precise, but I'm going to use that wick right before we opened, and that's the trend. High to low. Click that low button. Where are we at? And there it is again with the data. Hang on, let me just hit the refresh button. And we're back. So 23.6% took it out. 31.8% magically aligning with the bottom of the initial balance target. Well, no, we're way up here now. Sorry about that. Not sure why we're getting this glitch. But in any event, we'll work those bugs out after we're done. 70, we're above that 61.8%, right? So if this candle closes there, then I'm going to be like, all right, I want to be there. I want to be, I want to consider a trend reversal because we're in, we're in the middle, we're in the opening range, we're in the initial balance. Short like heck says F5 the chart. So I think that's kind of what I just did by doing that. But yeah, so I got to work on my data stream here. Yep, tried that. In any event, thank you guys for the pointers, for the tips. Let's keep moving though. Let's keep moving. We could kind of focus on some daily charts, if you will. I'm going to go check out the Euro FX. This is another market that's kind of been in play, so to speak. So this is kind of an interesting because we had this really big seller's wick. Now it wasn't so big that it was more than 50% of the size of the candle, but it was decent. It was a halt, right? Sellers brought us back down and say, hey, let's not get carried away. Today, same thing. Sellers wick on top of this candle, and then we're continuing our way down. And again, I'm going to look at that midpoint of the green candle, the benchmark candle, before I decide, hey, is this going to be a real turnaround, or is this just going to be, is this just a pause, and are we going to go ahead and start railing up again? So that's the Euro FX, and you can see, all the moving averages are kind of arcing up, and there's chatter in the Eurozone about interest rates, as there is chatter about interest rates here in the U.S. This is going to be an interest rate sensitive market between the ECB and the U.S., among other things, right? Among other things, with tariffs weighing heavily on the whole story. In any event, we don't have a significant retracement. I would draw another rectangle. This peak high here, that was on May 18th. So that resistance now becomes support. We're right up against it. It's right by the 23.6, which makes sense to me. Again, and right below it is the piercing line of the dominant candle. So we'll see if we close above that or below that today. It's going to kind of set my bias a little bit, skew my bias, I should say, a little bit for Sunday night. 38.1% is pretty far down here, but it lines up with this little rectangle. You can barely see it. This is an older area of resistance, which also becomes support now. So I'm going to drag that over just so I have it on the charts. So they're great contracts to trade, man. I mean, look at the currencies now are, interestingly enough, we have the Swissy up and the yen up. And remember, we talked about that. When all the currencies are down versus the U.S. dollar, except the Swiss franc and except the yen, then it's another bullet point in my it's risk off today. It's a signal for risk off, right? And so you have equities all down. You have in gold is down today. That's a whole nother story. But you have the Treasury complex all up. Right. And then you have the Swissy and the yen bucking the trend a little bit. So that's kind of a little bit of a tell of what we're seeing here. Speaking of currencies, though, we'd be remiss not to talk about the Bitcoin, micro Bitcoin. Great contract, by the way. I don't know if any of you guys have traded it. If you had. Short life hack. Sorry, I missed that question. We got I got the watermark from the NinjaTrader ecosystem website. You could either go there and search for it and pull it up. and add it to your desktop, or you could send an email to learn@ninjatrader.com and somebody or I'll send you the direct link for it. Either way, whatever's easier for you. So the Bitcoin here, it's interesting kind of phenomenon today. We're up a little bit over yesterday, right? We're at 83,500 right now. We have an inside bar from a body point of view. We even have an inside bar from a wick point of view. Let me kind of open this up a little bit more so everybody can see it better. In any event, so it's an inside bar. It's positive though when the stock index futures are way negative. And me and Tracy were talking about this yesterday. And I always scratch my head. I go, are these things? Is this a flight to safety? Is this an alternative? Is this alternative to equities? Are they correlated? Are they uncorrelated? Sometimes Bitcoin just marches to its own drummer, right? Sometimes it just marches to its own drummer. Anyway, I left that trend channel in there for hopes of us getting there, but I'm going to delete it at this point. I mean, it is not happening. I am going to draw some rectangles though really quickly here just to show where longer term support is. And again, the top of my rectangles touching the body of the lowest candle in recent memory. So this is the lowest. This is the body of a candle. It ignores the wick. The height of the rectangle is a little bit of art and less science. But the science part is you tap it up against there, and then you could kind of say, all right, this is this area of resistance, right? And resistance isn't a number; it's an area, right? These markets are volatile; they move around a lot. It's an area. So this is kind of framing the conversation on the downside. I'm going to do the same thing. I'm going to create a hamburger bun. I know Tracy is going to make fun of my hamburger bun in a minute, but that's okay. We we have again, the bottom of the rectangle is touching the highest body of a candle. And so this kind of frames my consolidation range, if you want to call it that. It's a big range, right? The top is at 88,000 plus some change, and the bottom is at 82,000. So about a 6,000 range right here on the Bitcoin. The moving averages are all kind of sloping down. We got the 200, we got the 50 EMA, we got the 21 EMA, and the most important one in my mind is that 8 EMA. There's no price separation between the 8 EMA and the candle. We've tagged it today as we did every single day except this guy, right? This one was an outlier, and then you gotta go all the way. There's very few of these candles that actually are not going through this 8 EMA. So when I'm thinking about rotation, I'm thinking about direction, I'm thinking about support and resistance. I want to see where we're trading at against that 8 EMA. And right now we're selling off. We have price distance from that 8 EMA right now to where we're trading at right now. So we'll see where this closes as well. But this is kind of sideways right now. I don't know. I don't know if I have an opinion here as well. And it's really hard to draw a fib right now, just based on this pattern, at least a short-term fib. I guess you could pick this low to this high, but I don't know that that's going to work on the Bitcoin right now. So anyway, we'll keep an eye on it. It is a cyber currency, so it's in the currency section of my market analyzer. And let's see, we talked about a lot of this stuff, and again, I'm gonna save some of my powder here for Tracy, because this crude oil down 4.83% again at a 62 handle. But if you'll notice something interesting when we get to this chart, literally we have buyers are coming in every time you get to that 59 handle. Buyers are coming in every time you get to that 59 handle, and Tracy pointed out why. So we'll talk about it again today. Gold is down considerably. That's a surprise. We'll take a peek at that right now real quick while we got the daily chart going. Again, this is taken after the equities. Huge red candle yesterday, huge red candle today, sitting right on that 21 EMA. Again, we're breaking through that the 8 EMA. And notice the 8 EMA here, you have this big price separation between the 8 EMA and the bottom of these candles, right? That's a very bullish sign. But then we kind of turned the corner yesterday pretty significantly on gold. Peter Schiff right now is saying something like, well, everybody's getting out of gold because they have to make their margin calls or something. I'm sure he's saying something like that. There's always a reason why gold is not going up every day for him. One like equals one MBT burger. That's going to be an expensive burger, man. That's going to be an expensive burger. Oh, anyway, let's keep rolling here. One thing one of my favorite things to talk about and to look at, and we didn't talk about this before, is the Russell 2000. Let's just pop that guy up. And I'm going to pinch in some more data here, so bear with me. Go down to the low. We are off, listen to this stat, 23.38% from the recent highs. Now that's to that wick. So let's put it up to where the price is right now and kind of adjust it. This is the ruler tool. It's pretty handy on the NinjaTrader desktop platform. We're down 21.38% as we speak. So that's a pretty, again, if you're of the theory that 20% marks the difference between a bullish market and a bearish market, we're in a bearish market in the Russell 2000. Remember, this is a small cap. This is small caps. We've traded about 293,000 so far in volume, which is pretty darn good volume. And there's a micro. I don't have the micro on my quote board here, but there is a micro contract for this as well as with all the stock index features. So it's a different animal, and I think the thought process is, well, maybe the small caps are more sensitive to stuff like interest rates. Probably have more. They probably need to borrow more than some of their large cap relatives, and supply chain issues that they can't. It's not as easy to kind of move around the cabin and adjust supply chains. They're victims of whatever it is they have. So that's some of the theories that are out there. But I'm not surprised to see that this is down as much as it is. Side Girl says rather hawkish. She thinks inflation will remain elevated. She's referring to Chair Powell. He said Fed will take their time moving forward. Well, let's take a look at the Fed funds tool here really quickly, if I could pull it up. I'm going to pull up this website. Hang on a second. We'll go to the probabilities tab. I'm going to yank it out. Let's just see what the market's thinking. This is like the market versus Jay Powell. It's market versus Powell. This is the Fed funds tool. If you haven't seen it before, it's pretty handy. It's Fed Watch, and basically it takes all of the months, right? It's all of the different months in the futures markets, the forward months going out, and it does a calculation to come up with probabilities on where the Fed funds rate's going to be at every Fed meeting going forward, right? And the next Fed meeting is the 5th, and we have a 59.7% probability that rates will remain unchanged. The Fed doesn't do anything, and this is kind of what Powell is signaling right now. It appears, so that's kind of number one. But kind of look at the next month is the June 18th meeting, and it's almost a 60% chance that we'll have a rate cut right after this pause rate cut, and then another one. These teal highlighted rectangles are the highest probability, a 58.8% chance in July. So it's like 1, 2, 3, 4 rate cuts between now and October 29th meeting, which is this is more dovish than we've seen even a week ago, right? We didn't see anything this dramatic a week ago, but that would mean the terminal rate for the end of the year, if this were true, again, it's going to change as time goes on, will be between 3.25% and 3.5%, or 325 basis points to 350 basis points. So that's still kind of, a lot of times that we'll see that dichotomy between what the Fed is signaling and what the Fed funds futures rate thinks. Now, we know further you go out on the line, it's going to be more dynamic, right? So that October number might shift to, I don't know, December or even 2024. Oh, boy. No, be nice. He's doing the best he could do. Michael Mielo, good to see you, man. I'm glad you're with us, man. Michael's bit was has been a long-term viewer of the NinjaTrader live stream. Appreciate you talking about the E-mini S&P really to the 5280 top of the volume profile rolled back over. Yeah, I mean it's going to be a brutal day. Let's take a look. Well, we got a couple minutes here before we're going to get into hot commodities. If my clock is right. Let's just go over to the Dow real quick. Take a peek at what's going on in the Dow. Again, on a daily chart, um, systematic price behavior, right? So let's just go to the peak high to our price right now. And this peak high was January 31st, right? And this was remember, I got a continuous chart up on the screen. So 13.1%. So the Dow is the winner chicken dinner, I think, in the stock index futures sweepstakes, only down 13.04% from that recent high. Now, notice that recent high wasn't February 19th like the other ones. It made it higher. It was earlier, right? So it's approximately, let me make sure I got that right. Hang on a second. Let me make sure I got my target. Yeah, there we go. That's even better. I just made it even less painful. I just made it 12.59%, right? And we hit that here. We hit that here 2 weeks, almost 3 weeks before S&P and NASDAQ hit it. So that's the story of the Dow right now. And it's a $5 Dow. There's micros on the Dow. We have 171,000 traded so far. So if you're thinking about the stock index futures from an order of volume point of view, this probably is this is the classic Dow. This probably is the least amount. So ES has 1.9. Second place, if just talking about the minis, don't talk about the micros for a second. The classic NASDAQ, the E-mini NASDAQ, 631,000. And then the Russell's got almost 300,000. And in last place is the Dow with 171,000. I think we saw, was it Stowe that traded the Dow the other day? Might have been Stowe that traded the Dow. It's a $5 tick, and there are micros on it, this contract as well, and those are 50-cent ticks. Remember, it's a 10 to 1 ratio. So it's not a bad market to trade, but it's a little bit different. Remember, there's only 30 components to the Dow. They're blue chip stocks, just like the Euro stock 50 in Europe. And they could move component by component could move, right? United Healthcare, one of the bigger companies in the Dow, as an example, when that thing moves, it could kind of drag the whole index with it. So keep that in mind, as opposed to like E-mini S&P has got 500. And the Russell, I had to think for a second. And the Russell has 2,000. So it's hard for any one component really to do that much damage. I know you're going to say, well, what about the Mag 7? Yeah, I mean, that's for sure is a force. But, I look at the NASDAQ for that as well. All right, so where are we at? Let's talk about the DAX for a second. The DAX is I have it on my screen because I think it's important. The DAX is a German stock index future traded on the Eurex exchange. You can get it through, especially if maybe you're in Europe, maybe you're early bird, maybe you wake up early. It's a pretty good contract, and there's micros on the DAX as well. 68,000 so far. Eurostock 50, and that's kind of like the European Dow equivalent, 1.9 million, right? And it's down 4.85%. And then you think about the Nikkei being down 4.24%. So we have this this is a global sell-off. And, there's a lot of this most of this has to do with tariffs in my mind and the possibility of a global recession. I don't know if you saw that Atlanta Fed GDP recently, but it was in the negative. It was like negative 2.8. After a negative 3.6 print, it went negative 2.8 for Q1 after Q1 was over, right? I think it was April 3rd or maybe April 1st. I can't remember when the Atlanta Fed folks published their data there. So there's a strong fear there that it looks like, all right, fat fish, be nice. I'm not laughing at that. Be nice. I appreciate you here though, man. Fatfish is another long time follower of NinjaTrader Live, so we do appreciate you for sure. So we're going to talk about some of these other commodity markets with Shai in about a minute or so. just looking at the board here, there's big percent moves in a lot of markets. Crude oil in particular, down 7.53%. Crazy big number. And, just take a look at all of the energy complex. All of the energy complex, I mean, they're all down 5% or more, right? Not surprising. They're correlated, but yeah, sometimes the nat gas isn't. But wow, what's some big moves there? Silver is going to be another story. We're going to have to talk about silver in a couple of seconds here. So appreciate everybody being with us here. Appreciate everyone hitting that like button for Sara. She's awesome. She will be back next Friday. So, and remember, there's no afternoon stream today. So it's just boom. We're going to get, Shai's going to give us some great intel. And then we're going to call it a day in about, 15 minutes. Having said all that, let's go ahead and get the fabulous Shy Girl with us for hot commodities.
Hey, Jim, how you doing? A wild day in the
Yeah.
markets, no?
Yeah, I know. I see these percentages, they're so big. It's like, across the board big, and it's crazy.
Absolutely. So I guess let's dig into hot commodities that are cold commodities, right? We'll start with crude oil. So we obviously broke through that $65 area, which is not good for shale producers. We had a low of 60.45. My level was 60.88. Below that, 59.45, and below that is 58.13. Now, I think one of the biggest issues with this, again, going back, is with these OPEC additions to the market, because the more kind of information on this, Kazakhstan, Halima Croft, who is an analyst for RBC, she's fantastic. So she wrote an excellent note this morning, so we'll give her credit for this. She mentioned, and I forgot about this, that Kazakhstan exceeded its quota by over 700,000 barrels per day, and Iraq has been a serial overproducer during this whole thing. And so adding 400K and trying to make Kazakhstan pull back, so that really wouldn't add that much to the market. But she also kind of said, that OPEC producers are signaling that they're not so wedded to higher prices that they'll tolerate perpetual cheating. So this could be an effort also for OPEC to kind of scare those overproducers. Kind of her take on the market, which I thought was very interesting. And we saw this back in 2020 when Russia and Saudi Arabia in March had a feud. Russia was overproducing, and so Saudi Arabia walked away from the table and said, okay, fine, we're going to turn on the taps all the way. Now, that happened to coincide with the entire planet shutting down, and oil prices went negative. It was a terrible time. But we have seen OPEC act in this manner before. So just something to think about in this market. It may be a game of mercy at this point.
Wow. So there's
what are you?
There's no enforcement mechanism, or at least the powers to be are saying, yeah, we don't want you to cheat, but if you do, you do.
Well, no, they've been yelled at for over a year, right? And a stern warning. They've made them give every month. They have to give their promised cuts, because they're supposed to overcompensate for their overproduction the following month, but they have it. I think Saudi Arabia has said enough is enough. So if you don't step in line, we'll just let oil price drop. And Saudi Arabia, more than anybody else, can handle the price drop much more than, say, Kazakhstan could.
Totally makes sense. All right, so let's just take a peek at the chart really quickly here. These are phenomenal candles, right? We had this old area here that we just broke through, and then it didn't stop there. We took out these lows that we saw in March. Right, pretty close to that $66 level. And then today, we tapped it yesterday, right? So I was like, all right, we tapped it yesterday. Maybe, maybe that line in the sand is going to hold. And then, man, oh man, this morning when I woke up and even throughout the day, and it just fell out of bed is the best way to explain it. I have some of Pax's lines here as well. I wish I had yours up here, but we'll get them up next time. But he had his 60 spot 50 was the big number he talked about this morning. In addition to that 61.19, 61.19 didn't hold. 60.50 did tap. We did tap out there a little bit. We have a little bit of a wick here at the bottom here, but it's not a dominant buyer's wick. This is relative to the size of the body. This is not a sign that the bottom is in yet. It could be, but I'm not gonna bet on it.
Yeah, I'm with you. We definitely could see more downside, but things change. Things change on a daily basis, so we'll see. Let's move over to gold because I want to cover the metals a little bit. Gold is interesting because it is down, but it's holding up better than some of the other metals. I'd say some of the industrial metals. So let's, take a look at what you are thinking on the charts. To me, it feels like we had that gap, up on, what was it? On the 26th, we gapped up that evening, and we just filled that gap. So, what is this looking like to you? I'm surprised, though, it's selling up. I feel like we've hit a point in the markets that everything is selling off. That now it is sell what you have to, not just having the indices sell off, having the stocks sell off. And we've been seeing stocks sell off in oil or in gold and silver, and these metals still continue higher, kind of as a flight to safety, and obviously the bond market. But it feels like the last couple of days, particularly today, is kind of more in that panic, sell what you have to mode.
Yeah, I agree. I mean, when I see this, when I see the formation where we had this powerful trend and there's no reason for that trend to stop, which we thought, at least I thought a couple days ago, this is kind of telling me, hey, we want risk off in the weekend. We're liquidating gold positions. We're liquidating equity positions. We're putting our money in our pocket. We're waiting. Maybe we'll get some, jump into treasuries a little bit. But that's what's in the back of my head, whether it's right or not. But just looking at the dynamics of the chart, we hit that 3,200 level, that psychological level, and then we kind of retraced back down. We broke through the 8 EMA. We're sitting right at the 21 EMA, which happens to coincide with that gap you just mentioned, and also that 50% retracement, the way I have my fib drawn. And we're kind of sitting here right now. So I'm not in full panic mode here, but if you go down to that 61.8% retracement, which is approximately pretty close to 3,000, and you just kind of do a loosely fitting trend line here where it converges with that in the next couple of days, this will be the real test then if this is a complete turnaround or just kind of a regular textbook retracement for gold. So that's what I'm thinking. I don't think the story is concluded just yet.
Oh, I agree with you. Absolutely. And let's move over to silver, which is getting annihilated today and yesterday, but today especially. Again, industrial metals. And when I look across the board at just all industrial metals and ferrous metals, they're all getting crushed across the board. We've got steel, aluminum, zinc, copper. I mean, you name it, the entire chart is red and deep red. So we have industrial metals getting sold off. Obviously, everybody's worried that this tariff situation is going to cause this huge economic slowdown, and consumption is apparently going to go to zero. And it feels like it feels more of a panic in this market, and some of the other industrial metals, rather than what we're seeing in the gold market.
Yeah, I mean that narrative makes sense to me. I feel that that's a great narrative, and I think I mean just look at all the metals. They're all on my quote board. They're all down today. On this silver chart, I had a kind of a target here at 30.37, and it didn't even slow down. I mean it didn't. There was no resistance there. There's no support there whatsoever. And the next level down here, I got these end of year lows, right? So we're looking at really a calendar year picture here on a daily candle of silver, and that we are approaching the same level that we started the year at, and it's a 29 handle, 29 spot 20, to see if that's double bottom holds or it doesn't hold. I can't even draw a fib line right now because it's fully retraced. And again, this is looking a little doom and gloomy.
Yeah, it's not looking good. I mean, I have an area around 28 spot 89. That would be kind of where I would be hoping it would halt and at least maybe have a rotation higher. And then below that, it gets uglier and uglier, to be honest. Then we're looking at 26 area. So let's move to platinum. Another one absolutely crushed. We kind of hit, if you want to call it that double top. Again, it's an industrial metal. I think it's interesting. Again, and I've said this before, I kind of like, if we could get, if things start looking better and we could get just below this 900 area, I would be looking for kind of a buy there. And we're getting pretty oversold, and that's kind of the area where it's been bought over and over and over again for months. So I am looking at, for a reaction a little bit lower, and maybe scope some longs there with a very tight stop.
Yeah, and it's eerily similar to the silver chart in that we, again, this double bottom here that we're approaching is started at the beginning of the calendar year. So it's jiving with what we just saw in silver from that point of view anyway. And yeah, I mean, I can't draw a fib. There's no trend line here. We just keep breaking below areas of support, Here's the next area of support according to my rectangle at 909 spot 8. We round it up to 910, and this extension is no longer any good. Not looking good.
So, well, no, this chart is not, not something I'd want to step in front of. Obviously, I would want to see a reaction at some of these support levels before I stepped in, but this is kind of been my area that I have bought because I've been kind of scalping. Well, for me, scalping is swing trading. But this market, and this is just traditional. This is where I've started initiating positions. So I'm watching that area again. Let's move on to an interesting one. I know we've been covering it this week, but Bitcoin is positive on the day. One of the only things positive on the day. So, which is interesting. I mean,
yeah.
What are your thoughts on this? I don't.
It seems like every time we talk, it's like, is Bitcoin correlated with stocks or not correlated with stocks? What's happening here? Every day is different with Bitcoin.
So I know it's crazy. So, but it's, it's one of the, well, an ether, are like the only thing green besides the VIX on my screen and bonds. So that market is definitely interesting. I feel like this is kind of a lot of chop for Bitcoin. Generally, we see kind of these bigger moves, but we're kind of caught in your hamburger bun there still, it seems like. So I guess we need to either break above or below. What's it looking like to you?
And this is a fresh hamburger bun. This is right from the bakery. This just came out. It's a big range if you say it out loud, but it's not really for Bitcoin. I mean, the bottom here is approximately
Right.
82,000. The top is 88,000. We're trading in it. It's clearly the moving averages are starting to slope down a little bit, and we're trading toward the lower end of the range. Now, today's green candle was a little bit bigger not too long ago. So this might just, maybe it didn't get the memo yet about it's supposed to sell off. I don't know. But, but, but if you look at the RSI here is only at 44. So there's room to go
Yep.
either way, for sure. I think the key
I know. I
level
feel
here.
like I feel like it could do anything.
I know, and that's why if you're day trading it though, you could use a lot of the key levels here in day trading and hopefully be successful. But I think the bottom line is here, my line in the sand, and I don't have that much data going back on this particular chart, but my line in the sand here is we start getting below that 79,000 level. Really, the radar goes off at 80,000. At 79,000, then I hope to see some wicks, some buyer wicks come in and kind of keep us back up right here. And the fact that we're this high still, Tracy, given the Armageddon that we're seeing everywhere else, we're not too far from 100,000. So I know it seems like a long way away. It's like 20% up, but the way this market moves, I'm encouraged.
Right. All right. Well, we
Anyway.
will check back with this next week.
Absolutely. Tracy, you have a great weekend. Appreciate you. Everybody in the chat today, everybody in the stream, thank you so much. Week 3 in the bank had a ton of great guests.
Thanks, guys.
And we'll be going strong 8 a.m. on Monday. In the meantime, remember the most important message of the day, I get to say this early today, Tracy, is please be safe out there and be good to each other. See you soon.